That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. We've got Caleb Silver as well as Yahoo Finance's Jared Blickery joining us here to break down the moves today. Jared, we're going to start with you on that close.
Well, thank you. We've got some records to share in the major indices. The NASDAQ Composite, the NASDAQ 100, and the S&P 500 all closing for records. But what you're seeing behind me is the Dow. That is up 230 points, and I will show you the intraday price action, just a little bit of red on the open, but for the most part, it was from the lower left to the upper right throughout the day, and the rally really got started on that retail sales report that we got at 8:30 a.m. in stock futures. Here is the NASDAQ up 0.75%, really holding on to steady gains throughout the afternoon here, and the S&P 500 up 0.5%, and I would be remiss if I didn't mention the small caps, which were up even more, up 1%, 1.14% as of the end of the day. Got to check in on the 10-year T-note, closing the day at 4.46%, up 1 basis point. The 30-year yield essentially flat, 5.01%, the same close as yesterday, and the U.S. dollar index up 0.25%. And checking out the sector action, we only had healthcare and real estate to close in the red. Healthcare was down 1.15%, as you can see there in the lower right. But to the upside, we had financials with some of those big bank earnings and now some of the regional bank earnings. That was up 1%, followed by staples and then industrials and tech. Both industrials and tech also closed at record highs today. And let's lead over to the NASDAQ 100, where we can see a lot of the tech stocks in there. Meta, Apple, both closing to the downside, as did Tesla, but the rest of the mega caps were in the green. Nvidia up almost 1%. That is a record high. Microsoft here up 1.2%. That is a record high. And Amazon and Alphabet each up about 1/3%. Switching over to the Dow, we can see to the right half, we already covered the mega cap, so let's talk about some of the individual names here. JP Morgan up almost 1.5%, American Express up 1%, Coca-Cola up 2%, representing the staples, and Disney and Communication Services up 2%. The healthcare names I was talking about that didn't do so well today, Johnson & Johnson down 1%, Merck also down 1%, Amgen down about 0.25%, and then United Health down more than them all, about 1.44%. And I'll send it back to you, Josh.
Thank you, Jared. So, Caleb, the economic data points we got today, I think you would look at those data points and you would say, the economy seems to be holding in there. Just curious your thoughts on that and the market moves.
Well, can I offer you a mint? Because the breath around here is getting really good. Look, you just said small caps were rallying. We had most sectors in the market rallying. That's what you want to see in a higher and upward trend to the right. When you have broader breadth, especially when small caps are rallying, you got to say there's a lot more belief in this market right now. The economic data is not concerning to anybody because it's pretty benign so far. Again, more smoke than fire when it comes to the impact of tariffs. Investors are looking way beyond that right now, and they're saying companies are still printing pretty good earnings here. A lot of them are returning cash flow to their shareholders. We know dividends have been cut a little bit over the last couple of quarters, but they're holding in there, and the buybacks are still strong with the biggest companies, and the performance is pretty good. So you got to be happy with that if you're an investor, and the trend is your friend here. Record highs beget more record highs, and the economic data is not slowing it down.
Investopedia, those fans, I know it's a broad base of investors. You like to say white belt to black belt, right? But generally, Caleb, how constructive are they on the market?
A lot of us and a lot of our readers pile into the same stocks. We ask them what you own. They own basically the top of the S&P 500, the top of the NASDAQ 100, but you do see people going out on the edge for it to take some chances, and that could be for meme stocks, and we've seen a recurrence and a rebirth of the meme stock rage, call it 3.0, so you see a little bit of that, but in general, you're looking at investors who are looking for the next great opportunity. What's the next NVIDIA? What's the next Palantir? And experimenting with some of those names. We've also seen a lot of retail investor activity in the quantum AI names, of course, but also in the power names again. And the power names were a big sector last year because they had to power all these AI centers. As those get built out, a lot of momentum in that sector as well. So our readers like to buy it all, but basically they own the same indexes that we all do, and occasionally they'll step out and get a little promiscuous.
What's on the wall of worry for those readers? If you ask them what their concerns are, what comes up?
Yeah, well, we ask them that every 2 months, and what's on the top of their list is tariffs and the impact of corporate profits, but also relations. It's got to be relations, whether it's Middle East relations or U.S.-China relations. And then, of course, they're concerned about the impact of a recession, of a potential recession. But we've all been kind of waiting around for one for a very long time. We just haven't had it yet. It'll come eventually, but right now, they're not worried about that too much. They're cautiously optimistic. They continue to buy. And we asked them, if we gave you another $10,000 that you can just invest discretionarily, they'd put it back into stocks, individual stocks.
Yeah. All right, Caleb. Leave it there for now because Netflix second quarter earnings, they're just now crossing the wire. See the stock down about 1.7% just initially here in the after hours. Joining me now is Yahoo Finance senior reporter Ali Canal. Ali, what do you see in that report?
Well, it seems to be a solid report, so it's interesting to see the shares decline today. Maybe something to dig into a little bit more in the release here, but we did beat expectations of both the top and bottom lines. In addition, Netflix raised full year revenue guidance. So revenue coming in to just over 11 billion versus expectations. Again, that was a beat compared to Bloomberg estimates along with Netflix's own guidance. We also saw earnings per share come in at a beat. They guided to revenue and earnings for the current quarter above Wall Street expectations. And then I said earlier, for full year 2025, the company now expects between 44.8 billion to 45.2 billion. That's ahead of its prior forecast of 43.5 billion and 44.5 billion revenue growth. And it does expect revenue from its ads business to roughly double to about 3 billion in 2025. Now, heading into this report, there were lofty expectations. There had been a back and forth debate on Wall Street when it comes to the valuation. It trades at around 40 times forward earnings, about double the S&P 500. But this is just a conversation that analysts have been having, right? How much optimism has been priced into this name at these levels? We are trading above $1,250 a share at the moment. This is a very expensive stock, a very rich stock. There's been some rumblings on Wall Street whether or not we could eventually see a stock split here. But if you take a look to the back half of the year, we have a very strong content slate. We have the return of key tentpole programming like Wednesday, Stranger Things. We just saw season 3 of Squid Game debut last month. And then on the live content side, they've been doubling down on sports, the NFL, WWE. There's been rumors that they could potentially go after UFC media rights. And there's also reports that they could be partnering with Spotify for a concert series as well. So just seems to be a lot of upside, particularly on the content. And then, of course, on the advertising business as well, which continues to chug along here. Currently, it remains one of the cheapest plans on the market right now. But again, shares are off around 2% in after hours here, Josh.
All right, thank you, Ali. You know, Caleb, so we're down 2%, but of course, heading into this print, I mean, the stock has been a monster. I had analysts come on and telling me, listen, they really like this company. They like the operating fundamentals. They like the execs. They like the content. They didn't love the valuation. I mean, you did have a 40% move this year into this print.
Yeah, but there's a lot of things we might cut in our lives if we have to cut expenses. Netflix is not going to be one of them for most people. They are ingrained into the American living room like no other company has been in a very long time. And I think as long as they continue to add subs.
Did you, it's an interesting point you're making because that was often brought up on this show. There were analysts who came up and said, well, this is one of those names. I'm just curious if you believe this, who said, if the economy gets wobbly, if people get spooked, you actually stick with the Netflix because this is one of the things people will not cut. Yeah. You buy that?
I absolutely buy it. You know what I get texts from my daughters from college? What's the Netflix password? You know, my dad was emailing me earlier. I can't get back on my Netflix.
I thought they were cracking down on that, Caleb. What's going on?
Yeah, well, everybody needs it and and they won't give it up. We'll give up a lot of things. We'll walk to work instead of drive before people give up their Netflix.
Do you think, let me ask you this, do you think the great streaming wars, is that over and Netflix is king and everybody else is just kind of fighting for second place? Listen, hey, second place can come with a lot of money. Yeah. But is that how you see it, or too soon?
I think that they sit atop the throne, pun intended there, and they're getting deeper into sports, into live sports. They push in all the right directions. They raise their prices about $1 every year. No one bats an eye. Who else can do that?
Yeah, fair point. Although my 6-year-old, I'll tell you, it's only YouTube for that kid. YouTube. That's the next generation. Who knows, Caleb? Let's check in on one of the top trending tickers on the Yahoo Finance homepage. Shares of real estate platform Opendoor surged on Thursday as retail traders piled into that name. This new excitement in Opendoor comes after activist investor Eric Jackson expressed interest in that stock. telling MarketWatch he thinks the stock could trade over 80 a share in the next couple of years. It's currently around $1.70. Caleb, let's talk about this one. Our colleague, by the way, Jake Conley, has a great story on this. And as Jake was pointing out, what a move. I mean, one month's gains were nearly 200%. The retail enthusiasm, as we mentioned, you got well-known guys like Eric Jackson, he's part of the story. He posts on X, by the way, believes it could be 100-bagger over the next few years. Traders seem to have piled in. What do you make of it?
Yeah, well, again, meme stock 3.0. This company lost some $85 million in the most recent quarter, right? It's purchasing properties. It purchases real estate properties in a real estate market that's essentially dead right now. But it is highly shorted, and highly shorted sends up the antenna signals for the meme stock crowd, because that says pile on in, especially when you have some backing and some big investors who are starting to show interest in it. But in terms of results, they're not there on the financial statements, but they're starting to get there on the stock price. These things usually don't end well. Well, hopefully this one won't have that same type of ending.
All right. Meanwhile, the U.S. House passes 3 crypto bills advancing the landmark legislation to the Senate. Congress regrouped for voting today as Crypto Week in Washington enters a new phase. Lawmakers were considering major bills on stablecoins, token markets, and a central bank digital currency ban. Again, with 3 passed the House and headed to the Senate. Some of the legislative hit procedure snags Wednesday, but also advanced some digital assets. Joining us now is Florida Congressman and Committee Whip of the U.S. House Financial Services Committee. That would be Mike Haridopoulos. Apologies, Congressman. Hopefully I didn't butcher it too terribly for you. Thank you for being here, sir. Why don't we start with you, just bring us up to speed. Where are we here with these bills?
Great. Well, thanks, Josh. And it's pronounced Haridopoulos. It's a very Greek name.
I'll know for next time.
Got it. Well, today we actually just passed the Genius Act. That is the one that creates the logic for stablecoins. It's the one that will make the United States the center of activity for stable coins. Of course, as we've moved this type of digital currency forward, we've been behind the times, as you know, because of the prior administration's, let's just say, lack of clarity on the whole issue. We're able to work that out in a bipartisan way, by the way, today in the United States House. I just came off the floor in the United States House, and of course, we're going to be moving forward with what's known as Clarity Act and CBDC next week.
One question I had, Congressman, I would bet you, sir, there are viewers watching this, and they're thinking, you know what? We don't own crypto. We don't have exposure to crypto. It's maybe not that high on their list of priorities. Explain to those viewers, Congressman, why this was such important legislation to get through now. What was the need? What was the demand?
Well, I think in general, just to give your viewers some notice on it, what we need is that we want the United States to be first and foremost the financial capital of the world. We want to make sure that we can move money quickly, efficiently, and without corruption. And what we do when we're looking at crypto in general, it should be what I would just call it a better electronic ledger, meaning you understand where money is moving, who's moving it, how much they're moving it, and you want to move it more quickly. Traditional banking, of course, has a lot of opportunity. We always talk about bank wires, et cetera, but crypto and blockchain are what really is the future. This way we have what's called a dollar-backed stablecoin, almost like if you went to a casino, you get handed a chip so you can move more easily within the casino, and then you can cash out, of course, when you leave that casino. I'm not saying that crypto is a casino. What I'm saying is it's a form or a coin, almost like a poker chip or device that you use in a casino, so you can move around more effectively instead of putting dollar bills all over the table, etc. So this is a smarter way of doing business. It allows more transactions, and it will do it more quickly. And remember, the other nations around the world are competing with this. I mean, many companies did not come to the United States because they didn't have the regulatory model, and so they went to places like El Salvador, the UAE, Singapore, let alone the EU. We want those dollars and, more importantly, finance to come to America. We want to be the epicenter of capitalism.
Congressman, how much of this was also about, and I'm sure this is a question folks are asking, that it came down to promises that were made on the campaign trail to the crypto industry, to the crypto lobby, which, let's be fair, that's a much more powerful, impactful, influential lobby now.
Oh, they are. To their credit, they got really involved in politics. I can say with confidence, at least from my own perspective, I didn't get any money from crypto when I ran. I'm a new member of Congress. I learned more about the issue. Of course, I serve as the whip of the Financial Services Committee. But this is the future of finance. It's a more efficient way to move money, and it should reduce overhead costs for everyday businesses. That's what really makes the difference. And what was happening is that those investment dollars were going everywhere else in the world because this is where people want to go with their money. And again, we're not talking Bitcoin, we're talking crypto, quote, blockchain. Bitcoin is just one of the realms in which move, and we've seen, of course, a radical increase in that price. But we want to make America the capital of finance, and the way you do it, because people who are in the finance world see this as a more efficient way to move money. And you also have the protections of the American regulatory system, and more importantly, let's just say a stable judicial system that doesn't exist in countries like China. And so we want to be that epicenter, and I think that's why this thing really moved in a bipartisan way. It wasn't about campaign dollars, it was about American financial opportunity to be the epicenter of this growing industry.
The market structure bill, Congressman, on that one, I'm curious how much harder you think that's going to be to ultimately get through. You know, you have heard Democrats raise what they see as these concerns, what they frame as conflicts of interest about the Trump family benefiting from their investments in crypto. How do you see that playing out?
No, that's a great question. I really appreciate it, Josh. And what this one is, to me, is even, I think this is even more important because you have the stable coin. That's important, but you need to have the regulatory structure on top of it, so you know if you're an investor whether you're being treated as a commodity, which the CFTC would regulate, or a financial instrument, which of course the SEC would regulate. And what was happening in the prior administration is that these companies are saying, we want to move these finances to America. They got this kind of blah, blah, blah answer, and there was no clarity. It's the reason why we named this market structure bill clarity. You know who's going to regulate you, how it works, and how to protect the investor. I think this is the linchpin of the whole thing. We've been trying to marry these two bills up, that being the stablecoin bill and the market structure bill, because one is dependent on the other. And I think that clarity is important because when people who have this money, who want to invest, they want to know who is going to be their regulator, as opposed to this nebulous situation that has been existing for the last 4 years.
Final question, Congressman. I just want to switch gears on you. The big, beautiful bill, sir. Polls suggest we got a majority of Americans here who oppose this legislation. I don't know if you saw this. Looks like a new one from CNN. They say Americans say 61% to 39% that they oppose the spending bill overall. I'm curious, sir, what you make of that. And do you see that potentially as a warning sign for the GOP, for Republicans, when it comes to the midterms?
Did you know that if you want to become an AI expert and be more valuable at work, you don't need to go through a course?
Well, look, based on the media reports, I'm not surprised it's a 60-40 split against us at this point. But when I walk through the bill, when I talk to real people on the street, and I tell them, hey, guess what? Because what we did, your taxes are actually going down. Because of what we did, if you earn tips or overtime, let alone a lifetime of work with Social Security, your taxes are going down. If you want to have a strong border wall, they're now protected. I mean, it's the piece by piece that we're going to be able to explain for the next 12 to 18 months, where I feel very confident when people actually find out what's in the big, beautiful bill, that they'll like it. And they're also going to find out what some of these lies about Medicaid. Medicaid is, as you know, is welfare health care. No one who's vulnerable is going to lose Medicaid. Those are people in nursing homes or of course, people who are disabled, let alone low-income families that have children. They're not losing Medicaid. But if you're an illegal alien, guess what? You're going to lose it because you shouldn't have it in the first place. And so a year from now, when people see that the most vulnerable were not kicked off Medicaid, they're going to like the bill. And I came here to Washington to put more money back in people's pockets. And if I can say one last thing, Josh, this myth about increasing the deficit is just that. They said that the economy would only grow at 1.8%. Well, when you supercharge the economy with tax cuts and incentives for business to invest in big manufacturing, you're gonna explode this economy in a positive way. We're gonna see 3 and 4% growth rates next year because we're reinvesting in the business around which the same ideas in mind when we passed the crypto legislation. We want America to be the place to do business and reduce that regulatory burden and make sure this economy truly takes off. That's our goal, and I'm confident a year from now, we're gonna be able to back that up.
Congressman Herodopoulos, I think I nailed it that time.
You nailed it. You nailed it, Josh.
Thank you, sir. Appreciate your time.
Thanks, Josh, for what you do every day. Thank you.
Caleb Silver, meanwhile, thank you, sir, for joining me here on Set Day. Final thoughts for the audience.
Well, when you listen to that and the crypto legislation that is being rolled out, which is kind of antithetical to why crypto was developed in the first place, you know that there are green lights for this industry, and that's why we're seeing record highs across the crypto patch, especially with Bitcoin lately. But you got to think about how this is going to affect people in the digital divide, right? Just like the internet did. If you're not in this asset class, you're going to be missing out on the opportunity. And if you don't understand how it works, you're going to be missing out on the opportunity. So this is going to require a lot of education. People need to get smart when it comes to how stable coins are going to affect them in their financial, in their banking accounts, in their stock accounts, because it is coming, and we better be prepared for it.
You know what? You always help us get smart. That's why I love having you on the show.
Thank you.
Thank you, my friend. Stick around. Much more market domination over time. That's still to come.
News about President Trump, it lit up global markets yesterday as headlines about firing Federal Reserve Chair Jerome Powell sent stocks plummeting as yields popped. On today's Stocks in Translation, we're going to look at prediction markets or binary market futures. And here's the definition. These are financial contracts regulated by the Commodity Futures Trading Commission that let you bet on whether a specific event will happen, paying $1 if it does and nothing if it doesn't. It's either or, hence the term binary. And here is a chart of Thursday's price action in the S&P 500 and what was happening in the prediction market. And in green here, we have the S&P 500. Just as the odds, as all those headlines about President Trump possibly firing not President Powell, he's the chair of the Federal Reserve, we saw those odds go up and we saw the stock market go down. It was pretty well timed here. And what's interesting is that stocks were managed to recover all those losses and actually close close to the highs of the day. But now I want to show you a second chart. This is the same prediction market versus the 30-year yield. And you can see here they were actually going in the same direction. And unlike stocks, the 30-year did not come back all the way down. In fact, it stayed above that critical 5% level into the close as it did the very next day. So there might have been some damage done there. And now I want to take a look at a longer-term chart of these prediction odds and the S&P 500. This goes all the way back to January 30th, and I'm going to show you the S&P 500 tanking here. I'm just kind of tracing that out here and recovering. And I don't think there's a longer-term correlation with these prediction market odds. So I just want to establish that right now. I do want to say that it's pretty interesting that the prediction odds have increased for Powell getting fired as S&P 500 has been hitting record highs. But those prediction odds, at least on a closing basis, by the end of the day, have never exceeded 25%. And intraday on Thursday, they actually hit 40%, but it never even got above 50%. So since we've seen a lot of these binary betting futures kind of rise in popularity over the years, I just wanted to show you a table that compares and contrasts them with auction markets. And so that's what we would traditionally call the stock market or the bond market or even commodity markets. So the first is a payout. In binary betting futures, we have all or nothing. That's $1 or zero. And of course, in the stock market, it depends on the per share price. And that can go up, it can go down, and it fluctuates on a minute-by-minute basis. And then another factor is price. We have, for binary betting, we have the implied price change versus the current market value as determined by market participants in these auction markets, the stock market, for instance. And then as far as risk is concerned, we have a fixed max loss in the binary betting. As I said, you can win $1 and you can't lose more than $0, or you can't go down to more than $0. And in the stock market, things are going to fluctuate on a minute-to-minute basis. And then finally, the typical focus here for prediction markets, that's going to be on a single event. It might be what the Fed is going to do. It might be on Powell getting fired. It might be on an election. And of course, in auction markets, in the stock market and bond market, we just have this on an ongoing basis. So as we saw with last year's elections, sometimes these betting markets deliver accurate information that's more so than traditional polls. And with controversial decisions becoming the norm, these markets are only likely to grow in size. So tune into Stocks in Translation for more jargon-busting deep dives, new episodes on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
All right. right, time now for To Watch Friday, July 18th. Going to start off on the earnings front. More banks reporting on Friday, including American Express and Truist Financial. American Express announced the results for the second quarter before the markets open. Amex capping off a busy week of bank earnings. Analysts expecting American Express to perform better than its competitors when it comes to credit strength and revenue growth, giving us more insight into the state of the consumer. And speaking of the consumer, we're going to be getting the preliminary consumer sentiment print for July on Friday. Economists forecast that number to rise compared to June's print to 61.5, signaling that consumers are feeling slightly more optimistic about the economy, but sentiment is still low by historical standards. And moving over to housing, the latest housing starts and building permits data is coming out on Friday too. Housing starts expected to rise to an annualized pace of 1.3 million, while building permits hold steady at 1.39 million. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend. Stay tuned.
Hello,
What's your name?
I name it Laura.
Do you mean my name is Laura?
Yes, perdón.
Where are you from?
I'm from Spain.
Do you mean I am from Spain?
Yes, sorry.
How old are you?
I do 27 years.
Do you mean I am 27 years old?
Oh, Dios mío. How do I get better in English?
You have to practice every single day.
But I don't have anyone to practice with.
Practicing with an AI tutor like me is affordable, easy, and will make you fluent in 3 months.
Nice. How do I level up my English?
Take the free quiz by clicking on this video. In 3 months, you'll be able to have conversations fluently, understand English movies, and land better job opportunities.
Hello and welcome to Morning Brief Market Sunrise. I'm Josh Schaefer, in for Ramzan Karmarli, live from Yahoo Finance's studios in New York. It's Thursday, July 17th. U.S. stock futures are muted this morning as the independence of the Federal Reserve is once again in question. We'll have the latest on growing tensions between President Trump and Fed Chair Jerome Powell. Plus, earnings season rolls on. We'll have the latest numbers from Taiwan Semiconductor and PepsiCo. And finally, we'll be taking a closer look at Starbucks shares, which are under pressure this morning as a second Wall Street firm has downgraded the stock. So grab your coffee and let's own the morning. Let's kick things off with what you need to know before the opening bell rings on Wall Street. First, taking a look at futures here. It's a bit of a mixed picture, but you're seeing futures tied to the NASDAQ actually turning perhaps slightly negative now, had been higher. But tech really has been leading the action so far this morning, and that's following the latest earnings results from Taiwan Semiconductor. The producer of AI chips said its net profit soared more than 60% over the prior year during the second quarter, surpassing Wall Street estimates and sending shares higher in pre-market trading. TSM executives called out NVIDIA's re-entrance into the Chinese market with its H20 AI chip as a key tailwind for the business, while also noting that U.S. tariffs could be a headwind for the company by the fourth quarter. Still, the positive outlook on AI demand from TSM sending U.S. stocks tied to the AI chip trade higher in the pre-market, with both NVIDIA and AMD up slightly. Elsewhere in chips, SK Hynix shares are under pressure as Goldman Sachs downgraded the Korean chip maker, citing expectations of increasing competition in the space. With chips driving the action in tech today, Trump's trade war still remains a key focus for the broader market. The Financial Times reporting this morning that the European Union is preparing a potential list of tariffs on U.S. goods, while President Trump is preparing a list of his own. Trump telling reporters at the White House he plans to send letters to more than 150 countries, notifying them of a tariff rate in a range of 10 to 15%. Trump, though, noting that the latest list will include smaller countries that, quote, don't do that much business. Tariffs haven't been the only thing the only way that President Trump is driving markets in recent days. Reports Wednesday morning from multiple media outlets pointed to Trump advancing his efforts to remove Federal Reserve Chair Jerome Powell. The initial news sent stocks lower as long-term Treasury yields climbed and the U.S. dollar weakened. But that trade has quickly reversed right after Trump said this.
No, we're not planning on doing anything. We're very concerned. He's doing a lousy job, but no, I'm not talking about that. Fortunately, we get to make a change in the next, 8 months or so. And we'll pick somebody that's good, and we'll pick somebody. I just want a fair job. We want to see lower interest rates. Our country deserves it.
Why did you cancel your Midjourney subscription? I found this hidden AI that does everything I want for a one-time cost. I'll show you.
Let's say you want to create a coloring book. All you do is type your idea, like, I want a coloring book of cute animals. And just like that, the pages are done for you. Want to create a children's storybook? Simply type your story idea. This AI doesn't just write it, it illustrates every page with beautiful, consistent characters. It's mind-blowing. Thinking of designing custom clip arts to sell online? Input your concept and immediately generate bulk clip art ready for your customers. Struggling with low views on your YouTube channel? This AI analyzes your videos and automatically creates attention-grabbing thumbnails, eliminating the hassle of creative guesswork. Want to create a personalized storybook for someone special? Just upload their photo, and this AI will turn them into the hero of their own beautifully illustrated book. You can even effortlessly turn beloved pets into exquisite artistic portraits. Upload a pet photo and watch it become a cherished, memorable piece of art. This isn't just design, it's magic, simplified for everyone, especially if you're not tech-savvy.
Click the link below to get instant access and grab the lifetime deal before it's gone.
Ready to activate AI across your enterprise now? MuleSoft can help. It's the unified platform for integration, automation, and API management that helps you put AI agents to work faster across your entire enterprise. Want to use AI to build workflows in seconds or personalize customer experiences in real time? It all starts with integration. AI works best when it can access all your data. And with hundreds, if not thousands, of applications, that data is everywhere. With MuleSoft, developers and admins can choose, connect your systems with code, or use natural language prompts. Build APIs faster, and then reuse them, and generate complex integration flows instantly. Once everything's connected, automate processes to extract data wherever it lives, from third-party and legacy systems to paper documents. Connect AI agents from Agentforce to third-party systems and data, and let them do the heavy lifting, delivering a better experience for your teams and your customers. And don't worry about managing those APIs. You can govern and supervise your entire IT estate from one place, ensuring every connector, API, and AI agent is secure. It's why we're trusted to power thousands of industry-leading companies, and why you're closer than ever to launching trusted AI across your enterprise. Go agent first, faster with MuleSoft.
Yahoo Finance's Josh Lipton spoke with former Federal Reserve Bank of Richmond President Jeff Lacker to break down the risks surrounding Fed independence. Let's take a listen.
The way financial markets reacted, it's consistent with other reversals the administration has made to policies that provoke adverse reactions in financial markets. So it's not a surprise. Unfortunately, it's consistent with an administration that does not seem to be aware of what is in its best interest ultimately.
Jeff, can the president actually fire the Fed chief? Is that even an option?
So as I understand the law, and as it's been, and there's some ambiguity about this, but the for cause is a possibility. That is, if he has cause. Now, cause isn't spelled out in the statutes, but malfeasance or gross negligence, things like at that kind of scale might satisfy that criteria. Whether this building project dust up satisfies that criteria or not, I sure don't know. But it doesn't strike me as beyond this administration to rely on a pretext that has a bit of thinness to it.
Jeff, on this next question, I'm asking you to speculate. I realize that, but I am just curious. What do you think Jay Powell makes of these reports? He's watching these headlines too.
I think it's something he regrets and isn't happy about, but I don't think it changes what he does. I just don't think it changes what the Fed does. I think they go straight down the middle of the fairway and call it the way they see it.
Trump has made it clear, Jeff, what he wants. He wants them cutting. He thinks they should have already been cutting. They're late. Jay Powell has indicated, listen, he wants more data. He wants to see how the tariff inflation plays out. So he's willing to wait and see right now. In your opinion, is that the prudent move?
I do. I think the yesterday's CPI report indicates that it's certainly plausible that a pulse of inflation is in the pipeline and is going to show up over the next several months. I think it'll be several months before we have a sense of the magnitude of that. The September data isn't going to come until October, so it'd be surprising to me if before December, say, they had a really good idea of what the magnitude of the inflation effect of the tariffs is going to be. Until they do that, I think they gotta pretty much hang tight.
We're taking a look at some key market movers this morning. PepsiCo and GE Aerospace reporting earnings ahead of the open. Let's start first with PepsiCo. Second quarter results hitting the wire a short time ago, beating estimates on the top and bottom lines. Core earnings per share coming in at $2.32. That was versus estimates for $2.03. As for net revenue, that came in at $22.73 billion. Strong international numbers helping drive sales growth there. The company, which also owns Gatorade and Quaker brands, maintained its annual outlook. So Pepsi coming out and maintaining its annual outlook here, perhaps another sign that the consumer continues to hold up. We've heard that earlier this week from several large banks. That's been a key theme for the week across earnings releases, but sort of zeroing in on Pepsi here and sort of what the story has been. Stock has entered this release down about 10% year to date coming in. You can see on your screen there, down over 18% over the last year. Pepsi is one of many consumer staples companies that has been under pressure as the new Trump administration has been making this push for healthier foods. Pepsi trying to figure out new solutions for that. That's been a key discussion going on with the company. Will be interesting to hear what they have to say about that on the call, as well as last night, President Trump coming out on Truth Social saying that Coke had agreed to use real cane sugar in its drinks. That will also likely be a focus on this Pepsi call, but again, shares are higher right now. I want to move on to our other earnings mover, GE Aerospace. That stock jumping after better than expected second quarter results, and the company also raising its full year guidance. The company seeing a rebound in demand in the aviation market, that offsetting some softness due to the global trade war. And demand to fix older airplanes also driving the company's increased guidance. Airlines are holding on to planes longer because of delivery delays from Boeing and Airbus. GE shares up over 60% so far this year. This has been one of the top stocks in the market that we have been keeping our eye on, so it looks like that rally continuing at least in the pre-market right now. We've got much more ahead on Morning Brief Market Sunrise. Up next, a look at one indicator on the health of the market. Plus, we're checking the crypto trade as Washington's Crypto Week appears back on track. Welcome back to Market Sunrise. The S&P 500's latest charge to record highs has been a narrow one. The technology sector has been the clear outperformer, with that sector rising more than 6% over the past month, outpacing the S&P 500's nearly 4% gain over this period. So this has been sort of that Magnificent Seven trade a little bit. Also some other large cap tech names really getting into that rally. When you think about an Oracle, you think about a Broadcom. And what strategists really tell you when this starts to happen is narrow breadth isn't necessarily a bad thing in and of itself, but it is a sign that really only one trade is working right now. And they would sort of argue you want to see more broad participation in this market, especially with the S&P sitting right near that record. In order for the market to keep chugging higher, you would probably need things to start to spread out. Of course, we are now in the heat of second quarter earnings season. Perhaps that could be a potential catalyst if the earnings for those 493 companies outside of our Mag 7 start to pick up earnings, as many analysts have been hoping for several quarters now. But I want to dive deeper into this trend with Stocks and Translations host Jared Blickery, who took a closer look at the market's latest bout with bad breath and what it could mean for the market moving forward.
On Monday, the S&P 500 closed down with a small loss of 0.4%, but only 49 stocks closed higher, while 453 closed lower, which was the worst showing for a loss this small in at least 3 decades. In this edition of Stocks in Translation, we're going to take a look at market breadth and market internals. Now, first, let's take a look at the definition of market breadth. It refers to how many stocks are participating in a move, whether to the upside or to the downside, and there are many different ways to measure it. So first up, I'm going to take a look at the S&P 500, which is in the top part of this chart here. And in the bottom, we have the percent of member stocks that are above the 200-day moving average. Now, this is a key level that technicians look at that tells you at a glance, should you be bullish or bearish. So I'm going to circle here. This goes from 0% to 100%. And I want to highlight some of the bear market lows that we've had here and the advances off of that we've seen. Here's 2011 after the S&P downgraded U.S. debt. Here's after the bear market of 2016. Here's 2020, that early COVID rebound. Then we had a bear market, and then there was another one in late 2022. But what I'm showing you here is that rebound in 2022, which kicked off the current bull market, that was not very strong. And we've seen breadth here kind of oscillate and not really break up the way that it has done in the past. So you put it all together, this chart is not saying that there's a lot of internal strength in the market right now. And in fact, if you've been paying attention to the headlines over the last few years about all the mega cap dominance, the Mag 7, that's not a surprise. So this just kind of reflects that reality. But what's a little bit concerning is that after this near bear market miss that we just had post-Liberation Day and this rally, we've barely gotten above 50%, and that is just not historically strong. So now I'm going to show you a different measure of this. This is the S&P 500, again in white, and here it's on a log scale. And then in green, I'm going to trace this out. Might be a little bit hard to see here. This is actually the S&P equal weight divided by the market cap weight. And so this tells you when it's higher, this means that more stocks are performing. And in fact, this huge surge that we're seeing above that came off of those 2009 lows. That was when we had record QE stimulus, the first QE stimulus in the US, a lot of fiscal stimulus as well. We saw a lot of breadth and participation from all the members in the stock exchange, stock market. Now, what we're seeing here, you can see we've had this steady decline over the last 2 years of this bull market, so that it's actually at the lowest levels since 2009. That was the end of the global financial crisis. And you could actually go a little bit further back into the beginning of the century. It was lower coming out of the dot-com bust, but this is historically low right now, and I find that concerning as well. I have one more measure that I want to show you here. You might have heard of the advanced decline line, and this is simply for the S&P 500, which we have here in white. The green line is the advanced decline line, and let's say on any given day, let's say there are 300 stocks moving to the upside in the S&P 500 and 200 to the downside. Well, you take that 300 minus the 200, and that equals 100. You take that total every single day, the winners minus the losers, and you add it to the total. And that gives you this line that usually tracks the underlying market. Now, sometimes there is a divergence. And what I want to point out here is that even though we're at record highs right here, we are also experiencing record highs in this indicator. So one of these three indicators I've shown you in these boards right now is showing some confirmation of these record highs in the S&P 500. But most are saying that there is a divergence. I'm going to close here with a final chart. This is the S&P 500 put this on a line chart basis, and this is year to date. And what I want to show you is we have those February highs right here, and we are just above them. And my concern is that with all these divergence measures, if we were to go back below this red line here, those prior highs, then we would have a situation where we're probably going to maybe test some of these lows in here. So tune into Stocks in Translation for more jargon-busting deep dives. New episodes on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
Need a domain but don't know how to build a website? Let AI help kickstart your online business and do the work for you with the absolutely incredible GoDaddy Aero experience.
กินน้อยเสี่ยงขาดสารอาหารนะครับ
อยากไปดูดอกไม้แล้ว
วัยนี้เรื่องกินเหนื่อยยากแต่เรื่องเที่ยวไม่มีถอย
คุณยายจะไปจริงหรอ
ไปนู่นแล้ว
ตามมาแล้ว
ใส่ใจตัวเองและเสริมด้วยใหม่ Ensure Advanced Pro มี YBG และสังกะสีมีส่วนช่วยในการทำหน้าที่ตามปกติของระบบภูมิคุ้มกันพร้อม HMB
สวยจัง
คุณยายสวยกว่า
วัยเก๋าระภูมิใจชัวร์ใหม่ Ensure Advanced Pro
We're keeping an eye on crypto today, as well as Crypto Week in Washington gets back on track. Overnight, Republicans dropped a two-day blockade on several crypto bills, opening the door for a full House vote. Of course, members of the administration, including President Trump, now believe that those bills will eventually be passed. We've seen that started to be priced into the market here. Interesting mover yesterday was Circle. So these bills, some of them center around stablecoins. Circle, of course, a recent IPO, very heavily involved in stablecoins. You can see that the 6-month chart looks pretty crazy, of course. It had a massive rally in June. Then what was interesting, though, is you can see stock had sort of stalled out from June into July. The stock actually fell about 20% from its highs. But then yesterday, as this news starts to continue to roll out of Washington, a massive rally again in Circle. That stock adding 20% in Wednesday's session alone. It will be interesting to track if Circle now can get back sort of into that momentum trade that it had been in June. Also been interesting to watch the exchanges. So the wild run for Robinhood has really continued here. Robinhood is up over 170% this year. That stock was up over 3% yesterday. Coinbase also rallying on this news. These exchanges, of course, benefiting from the legislation. And then from a coin-specific stand base, it's been kind of an interesting story when we think about just these crypto coins. Of course, Bitcoin recently hit a record high at 122,000, but I've had my eyes on Ethereum. Ethereum actually outperforming Bitcoin recently. You can see that in the blue line on your screen there. Ethereum up over 9% over the last 24 hours. And it's been interesting to watch sort of this spread of the crypto trade, right? It felt like maybe Bitcoin hits 122,000 before this bill is even passed, before we even know what's going to happen in Washington this week. Remember, that was back on Monday, I believe, that Bitcoin hit that record. And so you're starting to see the trade spread to some other coins, right? You're seeing Ethereum catch a bid, Solana catch a bid. And so this crypto trade continuing to broaden out. It's not all about Bitcoin right now. Investors looking for some other opportunities there. Coming up, though, we got the latest on earnings from drug maker Novartis and what to be on the lookout for when Netflix reports after the close. Welcome back. Time now for some trending tickers. We're watching Coca-Cola, Novartis, and Netflix. First up, Coca-Cola. President Trump posting on Truth Social that the company has agreed to use real cane sugar in its drinks in the United States, but the company hasn't confirmed the change yet, only saying in a statement that details on the, quote, new innovative offerings will be shared soon. The implications of the announcement reaching beyond Coke, the bigger movers are in corn-related trades. Corn futures edging lower on the news, and shares of producers of high fructose corn syrup, including Archer Daniels Midland, which makes products for some Coke drinks, and Ingredion, both falling sharply ahead of the open on Wall Street. And take a look at Novartis, the drug maker reporting earnings overnight, the results coming in above expectations and announcing a $10 billion share buyback. The drug maker also raised its guidance for the second time this year. But the good news overshadowed by the retirement of the company's chief financial officer after a decade in the role. The stock also under pressure after sales of a key drug missed expectations. That drug is widely viewed as crucial for the company's future, as some of Novartis' top medications face patent expirations this year, meaning generic versions will hit the market. And the stock to watch after the closing bell is going to be Netflix. It's the first of the big tech companies to report second quarter results. Here's a look at the expectations on Wall Street. Revenue expected to jump to just over $11 billion, up from $9.5 billion a year ago. As for earnings, the estimate is $7.09. Valuation remains top of mind for analysts and investors. Stock is already up roughly 40% so far this year, and it's trading near its highest level since 2022. The content lineup for the second half could also be a boon for the stock, which includes a new season of Stranger Things. The other thing to watch with Netflix here is really just going to be the day after stock reaction that we're starting to see for a big tech company that is already back near one of its highest levels ever and has seen a massive rally. It will be interesting to see, with the market also near a record high and a lot of that driven by tech, are investors still willing to pay up for these companies if Netflix does come out with solid results, or have expectations gotten too high? This will be an early tone setter for second quarter earnings season. We'll be excited to watch this one after the bell, and we'll have all that coverage for you live here on Yahoo Finance. Time now for our call of the day. Starbucks. Shares of the coffee giant falling after the company was hit with a downgrade by Jefferies to underperform from hold. The price target on the stock, $76. Analyst Andy Bear is saying there are no clear signs of meaningful or lasting fundamentals yet, and quote, expectations are too far ahead of reality. And that marks the second sell rating on the stock this week. Melius Research initiated coverage with a sell and an $80 price target. The analyst behind that call, Jacob Aiken-Phillips, joined Josh Lipton on market domination and explained the difference between how much people are paying and store traffic, and why that was a key driver for his call.
It's checks up 42% since 2019, fiscal 2019, and traffic's down like 10%. Check is more than just pricing, you know, because they've introduced food and like people are buying more items. But just in general, traffic's down, pricing's up, and it's a hard value equation to fix. And they've been trying to reinvent themselves over the last like year or two, and it's stretched longer than people have expected. And I expect it to be a bigger burden on their margin and growth profile over the next few years compared to what the consensus seems to believe.
And so when you told your clients on that one, Jacob, that one was a sell, if they came back to you and they said, how could you be wrong, Jacob? What's the upside risk I need to think about? You would tell them what?
Well, the new CEO, Brian Nichols, is very good, very well respected. The market seems to believe that the strategy is going to work. The whole third place, really focusing on basics, putting some more labor back into the stores. It's just, does that translate into traffic? And can their promotions like the summer berry refreshers or the ice horchata, can that drive traffic beyond just the value equation? Because value is more than just price. Value is convenience, it's innovation, newness, and just everything that the consumer looks for. But the price equation has gotten out of whack.
The Federal Reserve at top of mind for investors right now after the back and forth over whether President Trump would fire Fed Chair Jerome Powell. President Trump putting that idea on the back burner for now, but heavy hitters in the financial sector, including Goldman Sachs CEO David Solomon, speaking out, highlighting the importance of an independent Federal Reserve. Yahoo Finance executive editor Brian Sozzi sat down with Carlyle Group co-chairman David Rubenstein and asked him that very question.
Well, I think the markets would respond better if somebody is seen as independent. The candidates that have been mentioned, some of them are excellent, and I think they would be somewhat independent. But obviously, many of them have close relationship with the president. The president made it clear what he wants. Some of the people or candidates have already said they would lower interest rates. So maybe their existing view is that interest rates should come down, and not because of presidential pressure. But I think overall, it would be a good thing for the country to have a strong Fed chair and succeed Jay Powell rather than a weak Fed chair.
It's going to be a busy day when it comes to Fed policy. Several officials on the calendar set to speak today. Fed Governor Adriana Kugler giving a speech later this morning on the housing market and economic outlook. And this coming after New York Fed President John Williams said last night that he's reluctant to support cutting rates at this month's meeting. Now, that has been sort of driving markets in the back here. I want to take a look at just how stocks are doing this morning. Really relatively flat right now. We mentioned earlier in the show yesterday, of course, the potential of President Trump firing Jerome Powell kind of took hold of markets, but that really only lasted about an hour. But what's been key to watch within that has been the moves in treasuries, right? We've had our eyes on that 10-year. It's right below 4.5%, which has been kind of a key psychological level that's weighed on stocks. That, of course, often moves off economic data as well. We have retail sales coming out at 8:30 this morning. Will be interesting to see if that continues to show solid spending for the U.S. consumer. And if it does do that, then overall, that probably could hold the market where we are, at least for now. That's going to be it today for us on Market Sunrise. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day, streaming and online. I'm Josh Schaefer. Go on the morning.
Run a business? You need to know about the easiest CRM solution, Begin. It integrates with all my favorite applications and helps me get my job done effortlessly. So what are you waiting for? Begin today.
and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. A strong showing so far for stocks. Investors digesting new earnings reports, fresh economic data, while monitoring the next move in President Trump's campaign to oust Fed Reserve Chair Jerome Powell. Now I want to welcome in here, we got Caleb Silver, editor-in-chief at Investopedia, Joe Brusuelas, who is chief economist at the firm RSM, and our very own markets and data editor, that would be Jared Blickery, all here throughout the show to help break down these headlines. Jared, we're going to start with you, kicking things off with how you get to look at the deeper moves in today's markets, Jared.
Yes, we are in rally mode right now, and this started at 8:30 a.m. We got a pivot off of that retail sales announcement. This was an hour before the market opened. Here we're looking at the Dow Industrials up 282 points, and we are right near the highs of the day and the afternoon right here. Here's the NASDAQ set for a record close, notched an intraday record, and it has just been holding steady with about 0.8% of gains throughout the afternoon. And the S&P 500, here you go, up over 0.5%, also set for a record high. And we got to check in on the small caps. Russell 2000 up 1%, so that is up greater than any of the major indices we were just looking at. And I want to turn to the bond market as well, because I've had my eye on the 30-year bond yield. That is down just a smidge, but still holding above that critical 5% price or yield level right there. And then we have the US dollar, which has been trending up, and it's up another 0.33% today. And taking a look at the sector action, much like yesterday, we only have one sector in the red, except XLV, that's healthcare right here. This is down 1%. That was the leader yesterday. But today the leader is financials, and then after that we have industrials and tech. Each of those up more than 0.9%. Each of those set for a record high as well. After that, we have staples and materials, all of those outperforming the S&P 500 right here. And let us check in on the NASDAQ 100. We can see the mega caps getting some love here. Not Meta and Tesla, but NVIDIA up another 1.2%. Good for another record high, it should be. Microsoft up 1%. And we're seeing some broad strength in the tech sphere. If I take a look at the semis and also the software sector, we're going to see a lot of these big names in the green, some of the smaller ones as well. Here's software. You can see Shopify up 5%, Oracle up almost 3%. And also, let us check out the Dow, because we are seeing broad-based strength here. Couple of sore spots, that would be healthcare. United Health down over 1%. Looks like Amgen, Merck also down, but for the most part, we're seeing a lot of strength in these blue chip names. We can also take a look at the transports, and some of the bigger ones falling today. UNP down 1.5%, Uber and UPS in the red, but we have United Airlines, that's up 4.5% after some positive earnings yesterday afternoon. CSX, that's a railroad, that's up 3%, and the list goes on. I do want to show you some of the banking earnings right now, or not, the banking heat map, reflecting some of the earnings that we've seen this week. You can see mostly a green board. JP Morgan up 1.5%, Bank of America up 2%, Citigroup up 3%, and I'll send it back to you, Josh, on that.
All right, thank you, Jared. Caleb, I want to get you in here as well, because as Jared was pointing out here, we got green across the screen today. What do you make of these market moves?
Yeah, are you not entertained? Record highs usually beget more record highs, and that's kind of in the trend we're in right now. The economy seems to be holding up just fine. If you look at the retail sales numbers, if you look at the labor report from a couple of weeks ago, if you look at the inflation report, nothing shocking there, more smoke than fire when it comes to tariffs, and investors are looking way beyond that. What are they looking at? Improving corporate earnings. They weren't going to be as hot as they were in past quarters, but they're actually better than we thought they would be. Funny how that always works out. We've got 88% of the companies so far beating earnings that have reported. Only 50 companies have reported, but some big ones, namely the banks. So you got relatively strong retail sales. Was that a pull forward in advance of potential tariffs on August 1st? Doesn't really matter as long as retail sales aren't falling. There are jobs out there for people and prices aren't spiking that much. That's all good news for investors.
Joe, as the resident economist on the show today, let's get your take on this, because as Caleb was pointing out, listen, Joe, retail sales, they rose more than expected in June. You got U.S. jobless claims fell. What do you make of it, Joe? What do you think the Fed makes of it?
Well, I think that the economy is very dynamic and resilient. Your mileage may vary depending on what sector you worked in, but it looks to me as if the economy through the first half of the year is going to come in around that 1 to 1.5% growth path. Not quite what we want to see. Did like those retail sales earnings today. Quite strong across the board. Good rebound after a big decline in the previous month. But, you know, I tend to look more at the yields and Forex. Bond market's not quite as impressed as equity investors are. So we're going to have something of a split decision. I think by 1 o'clock Eastern, we only had about 450 million shares traded. So very light volume day. And many days we get real strong momentum on the close. It could be over $500 million. So we'll want to see how that shapes, how that shapes up as we head into the close. But for now, look, we've got a resilient economy. It's absorbing the blows from the rising inflation that's just started to show up.
And Joe, while I have you, I want to get your take on another story we've been talking a lot about, and that was this back and forth, Joe, between Trump and Powell. Trump did say, listen, he's not planning on firing Powell, but a lot of hot talk there, and I'm just curious what you made of it, Joe.
So I don't think eroding the credibility or the independence of the central bank is an optimal policy path for anybody. As a matter of fact, one gets the sense that this just hasn't been well thought through strategically or tactically over at the White House. One sure way to lose control at the end of the curve and to get rates to move up.
ชีวิตมีเรื่องน่ายินดีอยู่ในสิ่งที่ไม่รู้จัก พบความรู้สึกใหม่ที่ไม่เคยสัมผัส Experience the Force All New Mitsubishi X-Force HEV
Drive your ambition Mitsubishi Motors
Is to try to fire the Federal Reserve chairman. I just think that central bank independence has served the American economy exceptionally well, and that this is the bad idea of all bad ideas.
And Jared, Joe brings up the point here. I mean, we assume and we expect Fed independence. Maybe just walk us through, Joe, what do we mean by that, and why is that so important?
Well, we wanted an independent Fed that's not going to be controlled by Congress. With congressional mandate is to control the purse strings of America, to control that fiscal policy. You want to have independent monetary policy because that has different aims. We have maximum employment. We also have stable prices, which the Fed interprets to mean a 2% price target on that inflation target. Those can be operated independently of Congress. You merge those two and suddenly the wheels can come off. And I'll tell you one thing, I'm going to go back to this chart of the 30-year yield because I was watching this as like a hawk yesterday as the drama was unfolding. And I'm going to go into deeper depth with this in the next hour. But let me just show you a 2-day chart of the 30-year. And here is yesterday when we had some of these fireworks and we saw the yield shoot up there. Now, that was the turning point in the dialogue. That we had the New York Times story that they had a letter that President Trump was going to send to Jerome Powell, to the Federal Reserve. And then right as yields were popping above 5% and we saw stocks decline at that moment, that was when we saw the Trump walk back. So my thesis is I think Trump is paying attention to the bond market, and I think that's a good thing because we do need that Fed independence. And so we might have at least a little reprieve on that for the time being.
And Caleb, do you think Trump...
Josh,
I'm sorry, go ahead, Joe. Go ahead, please.
The reason why the Fed has independence is that we don't want political actors making short-term decisions in their own electoral interest that result in higher inflation and lower living standards over the medium to long term. That's why we don't allow Congress or the executive branch to set interest rate policy, because everywhere else where they don't have central bank independence, that's exactly what happens.
And Caleb, let me come to you. Do you think that Trump, ultimately, Caleb, does he actually get what he wants this year, regardless of the Powell drama? Do we see a cut?
He wants lower interest rates because he wants to lower the interest payments we make on our debt. Those are somewhere around $888 billion a year. You lower interest rates, that number goes down by maybe a couple $100 billion, maybe $100 billion, which then the Trump administration can use for whatever it wants or to offset the pain from tariffs. So that's the main reason he wants lower interest rates. Also, lower interest rates spur more buying by consumers and by businesses, and that could lead to higher stock prices if it leads to higher profits. But it really, at the heart of the matter here is the interest payments on the debt. That's aggressive. That takes money away from where they want to spend money. You ultimately get a couple of baby cuts by the end of the year, and even if he replaces Powell, it doesn't necessarily guarantee that the FOMC, which is made up of 12 members of the Federal Reserve, are going to vote to lower rates. It's not as if Fed Chair Powell is making the decision himself. It's pretty short-sighted to think that it's just him.
And Alexis, you've also been following the Trump-Powell headlines. Give us your take. What do you make of it?
Yeah, so look, we are looking at the independence of the Federal Reserve.
But by law, Congress made the Federal Reserve's Board of Governors independent of the executive branch. So that's in the Federal Reserve Act of 1913, which created the agency, and it's in the Banking Act of 1935 that amends it. And like with other agencies, Congress has tried to enhance the Federal Reserve's independence by blocking the president from firing its members, except if the termination is, quote, for cause. But the problem here is that phrase has been left in the statutes undefined. And so where does that leave us? It leaves us at the courts to have to interpret it. So there is one Supreme Court case from 1935 that took up the issue, not for the Federal Reserve or for the chair, but for the also independent Federal Trade Commission chair. Now, that official challenged President Roosevelt's decision to fire him over political differences, 100% political differences. But the court said that wasn't going to be reason enough, and instead it stuck by the language in the FTC law. And what it said was that the chair could be fired only for things like neglect or malfeasance. Still, though, the Trump administration has been testing the bounds of executive power to fire so-called independent agency officials. The Supreme Court, in fact, got involved in one such case so far. It was in an emergency request from the White House, and the Supreme Court allowed the terminations of the officials at the NLRB and MSPB to stay in place while the dispute plays out in the lower courts. But when the Supreme Court granted this pause, they also said that the administration would likely be able to show that these agencies exercise what they called considerable executive power. So the president has fired other independent agency officials, as we've seen play out. They're also challenging these terminations in court. But Josh, by and large, just another test here of executive power. Could it go to the Supreme Court? Possibly. We also have to look at the end of Jerome Powell's term coming up in, May 2026. So a lot of the legal experts that I talk with say we think he'll just wait it out.
Joe, here's an idea. I just want to bounce this off of you. I know, Joe, that Trump pounds the table. He wants cuts. What about, Joe, maybe Trump actually is okay if Powell doesn't cut? And if the economy, Joe, were to go wobbly, he could then say, well, listen, I said, what did I say? Too late, Powell. He didn't listen. Now look what you got.
Well, that's a good description of what almost surely would happen in that case. But look, that's a political concern. We're not really concerned here around the politics or the optics of this. What I'm concerned is that Caleb made a very strong case of exactly why we've given the Fed independence. Because if we move down the road that Caleb outlined, you're going to get higher inflation on the back of this. We already are going to have an extraordinarily difficult time getting the target back to 2%. My forecast is the PCE is going to go to 3% in the near term, likely higher, the CPI 3.5% with risk of 4%. It's going to be a substantial period of time, if ever, that we get the inflation target back to 2%. And guys, take a look at what the difference is if the inflation rate's 2% versus 4%. You've got a real direct decline in the standard of living, which is why I know you guys out there who are watching today really only care about equity prices. That's really not what's important here. It's that rate of inflation, making sure the central bank retains control of the long end of the curve. And if the 10-year moves above 4.5% and the 5-year makes an assault on 5.3 to 5.5, as I think it's going to here in the near term, equity prices are going to pay the price. Equity prices are going to bear the cost of that.
Joe, I want to get your take on something else, which is as we study these tariffs and we try to think through where they fall on the value chain, ultimately, Joe, when you listen to the Trump administration, those officials, what they seem to be arguing, Joe, is their bet that that's going to ultimately fall on foreign producers. That's who's going to take the hit. That's who's going to take the margin hit, more than Joe, more than Josh. What do you say to that?
Okay, so they say that on one hand, and then on the other, they brag about increased tax revenues. Who's paying that? Now tell me, guys, quick quiz for everybody here, right? The goods come in, they arrive at a port. Who pays the tax? It's the importer. Those are American companies. They just raised trade taxes, right? Then it's either thinner margins or it's passed along. What very enterprising individuals who are on television talk about today is, well, what about the Japanese? The Japanese are engaged in invoice pricing, right? They're cutting the price before it's shipped. but then there's still a tax attached to that, right? They're going to have their cake and eat it too, because right now we've really only seen inflation in the consumer product sector, toys, apparel, appliances, audiovisual equipment. We have yet to see the tariffs put on Mexico or the or Canada really begin to show up in terms of the food supply chain and the manufacturing supply chain. So today's the 17th of August. I don't know about you guys. It means in 14 days, we're going to get to the 31st. We'll have a pretty big decision, see if Trump's instincts serve him well and he backs off again, or they follow through and we have much higher taxes on imports from Canada and Mexico, in which in short time, you're going to see inflation show up on those products.
Caleb,
moreover, the Trump administration won't have much of an argument to stand on anymore after that.
Caleb, on that date on the calendar that Joe put on there, it seems like the markets have been betting here that yes, Trump believes in tariffs as a policy tool, and he is going to impose tariffs, but he also believes in his legacy, and he doesn't want to upset the economy, doesn't want to upset the stock market, and he's going to try to thread that needle. And the market's, I guess, taking a bet here, Caleb, that he'll be able to thread that needle. But what do you make of it?
Well, maybe they're just looking beyond the fact that maybe these do go into place, maybe they don't August 1st, and maybe they don't go into effect to the extent that they've been threatened. While Joe was mentioning tariffs, he didn't mention copper, but he knows that copper is a very big deal here. Dr. Copper runs things around here when it comes to industrial production, when it comes to electronic manufacturing, when it comes to just about every industry. And those tariffs going into effect August 1st, 50% on copper, that's going to weigh across all industries. And yes, we may get a pullback on that. That might just be a line in the sand that the Trump administration pulls back from eventually, like so many they've done so far. But if that does go into effect, that could seriously rattle the economy for a long period of time.
Joe, Alexis, thank you both so much for your time today. Appreciate it.
Thank you.
We are just getting started here on Market Domination. Coming up, the House of Representatives appear poised to pass key crypto legislation. We're going to hear from one of the reps voting on that bill on the other side. Plus, Uber is betting big on robo-taxis with pure-play electric vehicle maker Lucid as its partner. We'll dive into the details later in the hour. And retail sales rebound in June. So what's that mean for the likes of Nike and Lululemon? We're going to break down how to be positioned within this sector in today's Investor Playbook. Stick around. Much more Market Domination still to come. Crypto Week is back on track with the House working on delivering a clear pro-innovation framework for digital assets. Crypto stocks getting a boost this week amid optimism over legislation. Here to talk more about this, we've got Caleb. Let's talk about crypto and Investopedia. Over at Investopedia, are they excited about crypto? Not excited? How do they feel?
Yeah, I think about, 20% of our readers are into it in some form or another, whether it's through the Bitcoin ETFs or whether they own the coins outright. But price drives interest, and it drives interest in just about every asset class. Bitcoin is very unique because it's so shiny still, and the gains have been so impressive. So the higher the price goes, the more people are interested in it. You get a big collapse there, people are interested in that as well. But we always get this question over and over from those that have not invested in it yet. Should I? Is it too late? Is the price too high? And who knows? But all we know is this institutional adoption is for real. The legislation pathway is being cleared. Green lights all the way for crypto. I'm not saying prices necessarily go higher, but the fact is the government is basically opening the doors to put crypto into our financial lives in many different ways.
In terms of the recent move in Bitcoin, Caleb, I've been talking to folks on the show, and some of them, and I asked them explain this move to me, the recent move, and they'll say, well, don't overthink it. It's just strong corporate and institutional demand and limited supply. So yes, the price is going up. It's simple. Is it that simple? Does that explain what we're seeing?
Yeah, more buyers than sellers.
Right.
That drives the price up. But think about what's actually happening here. Both the Stablecoin Act, the Genius Act that probably get passed this week. This opens the door for now stablecoins in our banking system, things to bank Bitcoin against. You can now use Bitcoin to get a loan if you want. Use your Bitcoin as collateral. You can buy a home with Bitcoin. But you know who's been buying a lot of Bitcoin? The biggest asset managers on the planet. BlackRock now has some $78 billion worth of Bitcoin, and a lot of the other asset managers are piling into it as well. They want to have their piece of it because of that limited supply and because of the big institutional adoption. It'll be in our 401ks in a minute here.
We were talking off camera. You own Bitcoin. got in years ago. Why did you decide to get in?
I wanted to understand this ecosystem. You have to own the asset to understand it. I believe that. Know what you own, and I wanted to understand it. So I did some research on the white papers, and I'm not a technological genius. I'm an art major. That said, I'm a long-term investor, and I took a look and I noticed how many people were acquiring it. And it's something that I believe would be here 10 years from when I started buying it. I also believe it'll be around 10 years from now. I want to own those assets. Now, it's a small piece of my portfolio, along with some other tokens and coins, because I want to know that ecosystem. I want to know how they operate. And to be honest with you, it's been pretty beneficial. It's been a little bit of a volatility cooler in some cases, and sometimes an accelerant when other parts of the market weren't working.
What you mentioned other tokens and coins, what others interest you?
Yeah, Ether interests me. ETH interests me because it's actually smart. You can do things with it. Bitcoin's getting a little bit smarter, but it's always been the slower, slightly dumber coin. No offense, Satoshi. But Ether, you can actually do things with it. You can transact with it as well. And I wanted to own a couple of the stable coins as well, just to see how that relationship works when it's pegged to a fiat currency like the dollar. But I'm not going to go overboard with it. It's a small percentage of my portfolio, but I'm consistently adding to it like the rest of it, dollar cost averaging in every single month, just a little bit of money just to make sure I keep buying it at whatever level it's at so I continue to own it going forward.
Yeah, you're consistently at dollar cost averaging in. You're looking pretty smart, Caleb. You're pretty smart.
Me and 50 million other people, I guess, but I'm not smart enough to buy a big chunk of it back in 2009.
All right, thank you, Caleb. All right, now time for some of today's trending tickers. We're checking in on shares of Taiwan Semiconductor, Oracle, and Elevance Health. First up, check out TSMC getting a boost today after topping earnings estimates and raising its outlook for 2025 revenue growth. The company now forecasting sales growth of about 30%. That is up from mid-20% previously. Caleb, what do you make of it?
Yeah, I mean, chips are back and they're hot, and NVIDIA's record highs and the $4 trillion market cap mark, that's got a lot of people interested in this space again. But there's also deals being cut right now with China and U.S. chip makers, NVIDIA being case in point there. So as that stock goes, a lot of stocks go with it. But Taiwan Semiconductor is a giant. It's the biggest chip maker on the planet, and the demand for chips is insatiable. As long as relations are okay, and it looks like we're getting to some sort of a better ground in terms of those tariff negotiations with China, you'll see chip stocks continue to outperform. And they've been through a lot over the last couple of years. They were the hot sector, but I think they're back in style right now because it looks like tensions are cooling.
Yeah, it's over. So at TD Cowen, they have a hold on this one, telling clients AI cloud fueling, they say 2025's 30% revenue expansion. They talk about how AI could drive greater silicon use in PC and mobile devices. They did call out on this one, tariff impact to demand remains a risk later this year. Helps explain why they're on the sidelines. All right, moving on. Oracle, let's look at that one. Shares higher after receiving a sector outperform rating and a street high $300 price target over at Scotiabank, which sees strong growth potential for the software company's cloud computing business. So street high $300, Caleb. They say here we see Oracle transitioning into a new paradigm, reinventing itself, they say, as a tier one independent AI infrastructure provider. Yes. I mean, look at the chart. You can see the stock has enjoyed a big run, but we believe they told their clients Oracle remains underowned by long onlys. See opportunity for shares to rise further as Oracle outperforms expectations. So bullish on Mr. Larry Ellison.
Yeah, and Oracle is one of those super scalers, they call them out there, that's spending a lot of money to build out its AI infrastructure, build out its cloud computing capabilities, and offer those services and support to other companies. And it is a slight pivot for a company that was really not about that 5-10 years ago. You never would have said those words in the same sentence, but this company's been out in front of a lot of things, and I think it's benefiting from that. Any company that's doing some heavy spending on building the infrastructure, because for these big mega cap companies, it's a zero-sum game, the AI game. They want to own as much of it as possible. So as long as they keep spending and developing it and offering and selling those services out to other big companies, they're going to be fine.
Yeah, Larry Ellison, Software Cats, winning over a lot of new fans on the street. Lastly, shares of Elevance Health sinking after it cut its profit guidance for the year amid higher medical costs in the Affordable Care Act plans. The company also posted a miss for earnings per share. So cut the profit guidance, Caleb. Reports noting higher medical costs and Affordable Care Act plans, lagging reimbursement from Medicaid. I mean, the health insurers broadly not been delivering us great news. And look at the stock on that one, down hard.
Yeah, no, and when you cut your outlook or don't provide an outlook, you're going to expect your stock to get crushed like it's been crushed today, down 12 or so %. But what's important to watch with providers like this is the benefit expense ratio. How high is that expense ratio climbing in terms of the payouts they have to make? It was at 88.9%. That's up 2.6% year over year. It doesn't sound like a lot, but when that's your biggest expense and that's weighing on you, that's going to weigh on your stock, and investors see right through that.
Yeah, I see analysts at Vital Knowledge cited at Bloomberg is saying managed care, they say, probably become the most hated sector in the whole market right now. They say, given rising medical costs, the intense pressure in various government programs, they go on to say not much reason for people to buy the dip.
Yeah, and they are going to be under pressure because we know through the great big beautiful tax bill, or whatever it's called, that we know some of those social services are going to be cut. That means higher expenses for a lot of these providers as well. So they're going to be probably front and center of that with a lot of other companies that are facing trouble. United Health, one of the biggest healthcare providers in the country. They have other issues, other headline issues. They're going to face these problems as well.
Yeah, rough day for Elevance Health. All right, coming up, Uber betting big on robo-taxis with pure play electric vehicle maker Lucid as its partner. We're going to get you on the details on the other side. Stick around, much more market domination still to come.
เคยลองทุกอย่างที่ว่าดีแต่ผมก็ยังขาดดุดร่วงเยอะอยู่จนได้ใช้แชมพูไบโอเวทก็เห็นผลค่ะเพราะไบโอเวทสกัดจากสมุนไพรถึง7ชนิดช่วยลดผมขาดดุดร่วงทำให้ผมดูแข็งแรงนุ่มสวยแชมพูไบโอเวทช่วยลดผมขาดดุดร่วง
ม้าสูดอากาศได้เต็มที่เลย
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Tyler Kendall, I'm Kaylee Lyons.
Tonight, the crypto industry gets a big win as the House sends a stablecoin bill to the president's desk, the first federal legislation to regulate those tokens.
The administration continues to be in support of that. We are definitely receptive to it to make crypto payments easier and more efficient for those who seek to use crypto as simple as buying a cup of coffee.
We're live on Capitol Hill with the latest on digital asset legislation, and we'll discuss with Democratic Congresswoman Debbie Dingell of Michigan.
And U.S. retail sales rebound, easing some anxiety around the impact of tariffs on consumer demand. We'll get a read on that through the lens of domestic imports with Gene Soroka, Executive Director of the Port of Los Angeles. And we'll have more on the economy and President Trump's continued pressure on Fed Chair Jerome Powell to cut interest rates with Joe Livornia, counselor to Treasury Secretary Scott Bessent.
Plus, the White House announced that President Trump was diagnosed with a vein disease. We'll bring you all the details on his conditions up ahead. But we begin tonight with Congress, where the House just passed landmark stablecoin legislation. The bill is now ready to be sent to the president's desk. Joining us now with the details live from Capitol Hill is Bloomberg's Eric Wasson. Eric, you've been covering this. What did it take to get the bill over the finish line?
Yeah, there was a lot of drama with Crypto Week. Essentially, it surrounded this issue of whether the central bank can issue a cryptocurrency. Libertarians and members of the House Freedom Caucus were very concerned that this prohibition on doing it would not in any way make it into law. There was a last-minute agreement to eventually attach it to the must-pass defense authorization bill at the end of the year. Essentially, they are worried that a central bank cryptocurrency would be able to track the payments of all the citizens in the U.S. and violate privacy. It's not really going to be part of this market structure bill that the House also passes being sent to the Senate, and that gives that bill a greater chance of getting the 60 votes it needs to pass the Senate sometime in September or beyond.
And Eric, when we consider the House's business remaining for this week, we know we're up against a deadline of tomorrow for the rescissions package that just passed the Senate in the wee hours this morning to actually be signed into law by President Trump. When is the House vote likely to happen?
You know, I'm hearing it's going to be around midnight. This is another example of Congress doing its, business much like a college student at the last minute, very much in the middle of the night. Basically, this is a real death knell for federal funding for PBS and NPR. Many rural stations, smaller stations will close because of this, even if larger TV and radio stations can make it up through donors. It also claws back a significant amount of foreign aid. And the White House is promising more of these DOGE-related bills to come up before Congress. This is $9 billion trillion in cuts. Democrats are saying this undermines the bipartisan traditional appropriations process that's needed to keep the government funded after October 1st and raising the possibility there could be a shutdown. They say, you know, if we strike a bipartisan deal where you get your defense money, we get our PBS money, and you go out and take away that PBS money, they can't do any kind of deal. So we're going to be watching that unfolding situation, but there certainly is a rising shutdown risk in the fall.
All right, Bloomberg's Eric Wasson live on Capitol Hill for us. Thank you so much. And we want to get back to the crypto legislation specifically, more on this administration's crypto policy push overall as we turn to Joe Livornia, counselor to Treasury Secretary Scott Bessent, former special assistant to President Trump during his first administration. Joe, welcome back to Bloomberg TV and radio. When we consider the legitimizing nature of this stablecoin vote specifically and the fact that President Trump is going to have to sign stablecoin legislation into law, I wonder what the implication is here for that legitimacy for traditional financial institutions. We had a lot of big bank CEOs on earnings calls this week talking about how stablecoins could actually pose a risk to them in terms of competition for payments. Do they have something to fear here?
Let me say at the outset, the bill is going through, went through because of President Trump's leadership. And as Secretary Bessent has highlighted, this is incredible innovation as the president wants the U.S. to be the crypto capital of the world, the digital asset of the world, and the fact that basically the stablecoin market is growing at a really almost an exponential pace, and the possibility is this can be a several $1 trillion demand for U.S. assets is extraordinarily positive. And, you know, when you have innovation like this and the U.S. is going to be the center of it, I can understand how people get nervous about it because it changes the way of doing business. But this is going to provide a regulatory framework that's going to keep the U.S. at the forefront of innovation, buttress the reserve currency, the dollar. I think it's fantastic legislation, and kudos to President Trump and Secretary Bessent for helping this thing get over the finish line.
Joe, we just had some reporting from the Financial Times hit that President Trump is preparing to open U.S. 401ks, the retirement market, in part to crypto investments. Knowing how famously volatile digital assets have been, cryptocurrencies have been, is there not some risk in that when we're talking about retirement investments specifically?
I mean, if you're setting up a 401k, like for example, take the Trump accounts, for example. I mean, you're holding this asset over long periods of time. I mean, these aren't trading vehicles. Stocks themselves can be incredibly volatile. So, I mean, if it's for retirement, it's for long-term savings and wealth creation, then you want to give people the opportunity to diversify their asset flow in a way that meets their own needs. So I don't see a problem with any of it, actually.
Mr. Livornia, we want to pivot and talk about the Federal Reserve. I know that you agree with President Trump that the Fed should cut, but does this pressure campaign that we are seeing from the administration risk that it might not be credible to the markets when the Fed ultimately does cut rates?
Well, the market actually has rate cuts built in. It has had rate cuts built in for some time. Chair Powell and many of his colleagues have said many times, and you see it in their official forecasts, that the Fed funds rate is actually well above what they consider neutral, which means monetary policy is tight. And if you look at the 10-year note, the 10-year yield essentially has been trading below the Fed funds target for a couple to 3 years or thereabouts. So the market really is saying that inflation's not a problem. In fact, we can get to it. The inflation data has been great. So the market is expecting easing. So whenever the Fed eventually does ease, that seems to me clearly the next move. I don't see the market being disjointed in any way. And the president, as the president of the United States, has all the all the reason. If he wants to talk about anything he wants to talk about, he should go for it, and he is. So certainly people respect that. If it wants to be on the Fed, then so be it.
Well, the president has suggested that rates are currently 3 points too high. Just for clarity, where do you think the Fed funds rate should be?
All I could say is if you look at the Fed's forecast for where neutral is, there's a very wide range. Neutral is as low as about 2.5%. Maybe rates need to eventually perhaps go lower than that. So I don't think President Trump is off the mark. Just as an aside, if you remember back under President Trump's first term, he says the Fed should cut rates, and he was correct. The economy was doing very well. It grew almost 3% in his first 3 years, and of course the pandemic struck. And the Fed funds rate was sort of where President Trump is saying it should be. So the president certainly has the right to talk about monetary policy. It's very important, and he may not be off base on many of this.
Well, talking about monetary policy is one thing. Openly suggesting that the Fed chair is doing a poor job and therefore may need to be replaced expediently is another, as we're hearing from others in the administration, like Bill Pulte, who, of course, is openly calling for the chair to resign. I just wonder here, Joe, if the ultimate goal is lower interest rates, that you want lower interest burden when it comes to the U.S. debt, lower mortgage rates for everyday Americans, if you don't see a risk here that there's actually an adverse effect, that, yes, we may see rates come down at the short end, but at the long end, because of a loss of credibility around keeping a lid on inflation, you actually see long end rates go up.
Yeah, I've never really, believed that because, the Fed said it's data dependent, and the inflation data has been excellent, essentially for 5 months in a row. I mean, people got all worried about, the CPI, which basically came in line with expectations. Then we had a stellar producer price index and an import price report today. So if the Fed's following the data and inflation's going lower and they wind up cutting interest rates, I don't see how markets are going to be worried about that. In fact, if you look at where yields are, they're lower than where they started the year. And when a lot of the people who are worried about the market selling off because of credibility and things of that sort, these are many of the same folks who back in April said the U.S. was uninvestable. And yet we had Treasury data that came out today that showed essentially record inflow into the market with Treasury demand virtually at an all-time high. So these arguments I don't think hold up to really scrutiny into the facts.
Unlock the GoDaddy Aero experience when you purchase a domain from GoDaddy and let AI do the heavy lifting for you. Find a great domain name, build a website, create a logo and more, all fueled by the power of AI. Use GoDaddy Aero to help you build your business online.
Well, I'm glad that you brought up the data because the retail sales data today showed that it was weaker among some sectors: furniture retailers, department stores, sporting goods stores. These are the sectors that tend to be more import heavy. I'm wondering, how do you explain consumers perhaps rotating away from those categories that have that high tariff exposure?
Yeah, I would not. Yeah, you have to be very careful with that. I know people have done the same thing with the CPI data. Every month there's relative price change. There's seasonal adjustments in these numbers. They move around a lot. The vast majority of the retail sales categories went up. I'd be very careful to cherry pick a couple of sectors that have some relation to imports and then say, okay, this is the tariff. Because what we know is the import price data, prices from China year on year are actually lower. Well, obviously we have a big trade deficit with a record trade deficit. Prices year on year are lower for Chinese goods now than they were back when President Trump first instituted those tariffs. So we have to be very careful in looking at the data. It's clear, and it should be obvious to everyone, that the tariff effect has not shown up really at all, despite expectations that tariffs would be causing these massive price effects. They haven't happened, and yet, of course, we know the tariffs are working because we're generating record revenue. We may have $300 billion in Treasury revenue this year from tariffs. That's not the calendar year. That's not an unreasonable estimate.
And Joe, finally, before we let you go, I know you serve as counselor to Treasury Secretary Scott Bessent. I'm sure it's not news to you that Scott Bessent reportedly is on the short list for who could become the next Fed chair, in addition to others in the administration like Kevin Hassett of the National Economic Council. If the president asked you, is that a job you would want? Should we put you on the short list?
Secretary Bessent is tall. I'm short. The only list I'm on is the 5'8" list, 5 feet 8 inches tall on a good day.
All right. We'll leave it at that. Joe Livornia, counselor to U.S. Treasury Secretary Scott Bessent, thank you so much for joining Bloomberg. Coming up, the outlook for the Federal Reserve as we continue this conversation, tensions escalating between the president and Chair Jerome Powell. But first, the Port of Los Angeles saw a busy June as tariffs whipsawed imports. We'll discuss with Gene Soroka, Executive Director of the port, next. This is Balance of Power on Bloomberg TV and radio.
outlook for earnings is decent, but it is not spectacular. The outlook for economy is decent, but not spectacular.
The only thing that's certain is uncertainty. The only high conviction you should have is low conviction out here. We should expect volatility. That's the highest conviction theme that's out there right now.
Whether or not you have 1 or 2 or 3 or 0 cuts from now to 2025, I'm not sure that that's a game changer for the U.S. economy.
The irony in all this, Jonathan, is that the Fed would probably be lowering rates had it not been for the policies around trade, tariffs.
Just some of the views this morning on Bloomberg Surveillance on everything from tariffs to the Fed. And despite questions around the future of both, stocks closed today at fresh records. For more here on Bloomberg TV and radio, we turn to Bloomberg's Romaine Bostick live from World Headquarters in New York. And Romaine, up we go once again.
Yeah, sometimes you don't need spectacular, Kaylee. I mean, sometimes you just need okay, and that's kind of what we got. We saw that on the economic data front with that retail sales report this morning, and we saw that with the slew of earnings that seemed to confirm what a lot of folks in markets have kind of sussed out, which is that the tariff impact and the policy impact coming out of Washington, at least for right now, isn't material to the bottom lines. Case in point is Pepsi. PepsiCo reported earnings this morning, and they, of course, talked a lot about tariffs, a lot about economic conditions, and they also made it clear that they have pricing power and they have levers to be able to deal with some of that tariff impact. And you saw the shares rally 7.5%. In fact, best day for Pepsi going all the way back to early 2020, if that gives you a sense of where investors' heads are at. And then, of course, when it comes to the broad cap space, you had Taiwan Semi, the big chip manufacturer, contract manufacturer for chips, basically saying that all of that corporate spending on AI, Kaylee and Tyler, that too is still intact. You saw that stock rally as well as a lot of the chip stocks, and that might be emboldening the markets overall to continue this rally, which as of today has the S&P and the NASDAQ each at record highs.
Well, Romaine, another company we want to highlight is Netflix, which boosted its revenue guidance for the full year. What else did we learn for that company today?
It was actually a really good report, Tyler. Unfortunately, the shares aren't moving a whole lot, and that's largely a function of the fact that this stock had rallied pretty significantly into today's report. Now, remember, it's a relatively small weighting in the S&P 500, only about 1%. So as Netflix goes, not necessarily goes the broader market, but it is a good barometer of investor sentiment, and we'll see what happens when we get to the cash session tomorrow morning. Right now, the conference call is going on, but you're talking about a company that reported record profit, record revenue, and says it can continue to grow for one big reason, Tyler, and that's because we're all still tethered to this network, and more importantly, we're willing to pay up, whether it's that subscription fee, that really high one, as high as $20 a month, or maybe that lower tier one, that ad tier fee, which right now is $8 and rising.
I believe I might be guilty of that too, Romaine. Bloomberg's Romaine Bostick, thank you so much. Now, as markets brace for the full impact of tariffs, imports have whipsawed off the changes in the administration's trade policy. This is being felt in the busiest U.S. trade hub, the Port of Los Angeles, which saw a record month in June as businesses raced to beat shifting tariff deadlines. Joining us now live here in our Washington studio is Gene Soroka, Executive Director of the Port of Los Angeles. Mr. Soroka, thanks so much for joining Bloomberg. I want to drill down on some of this data. We saw an 8% surge in year-over-year imports in June for your port. You had seen a slump in shipping volumes in May. What are we learning about importers' behaviors as this tariff deadline shifts, but now appears to be set on August 1st?
Good afternoon, Tyler. It's so great to be here with you both. What we're seeing is that hard policy goes in, we take a nosedive on cargo volume. When those goalposts shift, the cargo picks up, trying to race to the next deadline.
Well, so when we're considering timelines here, knowing this next deadline is August 1st, even if the tariffs were implemented, are they likely to be that disruptive of an effect when we consider seasonality and the fact that a lot of retailers, for example, likely have already stocked up for the holidays? Are we getting to the point in the year where it's not as potentially detrimental as it could have been?
Possibly not, but there are two sides to that coin, Kaylee, as well. There's a little bit of an advance so far this summer in bringing in the traditional year-end holiday products. But the folks that work in and around this system, dock workers, truck drivers, warehouse folks, they're going to see a dip in that cargo probably in August when they normally start really hitting their stride as far as work hours and jobs. So that could look a little bit different than in years past.
I'm actually glad that you brought up the labor force because the last jobs report indicated that some of these areas really have remained relatively stable when we are talking about dock workers and truck drivers that are working in and around these ports. Can you just give us a sense on the ground what you're hearing about what their growth prospects actually do look like amid this uncertainty?
Yeah, this has been really up and down, Tyler. In the back half of May, for every 2 dock workers that went to the hiring hall looking for a job, 1 went home without one. And that was really unique for us. Then in the back half of June, we started to see that cargo rise again after the tariff numbers, especially with China, were dropped. We saw people scooping up that cargo over in Asia, trying to rush it in. The dock workers' jobs now outstrip the number of workers we have going to the hiring hall. So it's been a pretty quick swing. Yet those longshoremen have been on the job. They've been ready to bounce back when that volume shift actually happens. But we like to see a little bit of runway here so we can plan the good labor force, the space that's needed at the ports, and the equipment to move all this cargo. A little predictability always helps us.
Well, when we consider China specifically, which you just mentioned, China, of course, right now has tariffs lower than they were thanks to a tentative agreement that the 2 countries have made at this point. But the president's also suggesting that they could face a 100% tariff, a secondary tariff, if they continue to buy Russian oil at the end of 50 days. How much does what happens at the port of LA hinge specifically on our policy when it comes to trade with China and those trade flows continue?
Kaylee, a lot. Back when, in 2018, when the first tariffs went in, China was 60% of our business at the port of LA. Today it's 45 and dropping. The effective tariff with China right now is still 55%. We're definitely seeing cargo shift to other locations with lower numbers. But let me put it this way too.
สั่งเป็นกลุ่มลดแรงกว่าด้วย Grab Food Group Order ลดทันทีสูงสุด 15% ไม่มีขั้นต่ำลดเพิ่มสูงสุด
Everybody in other countries, manufacturers and sourcers alike, they understand that 55% tariffs on China means a landed price of X. They're not going to be appreciably lower than that. So it raises prices at the wholesale level across the board when it comes to the international procurement side of our business.
If we broaden this out and we're talking about perhaps a shift in, or maybe you can answer this, is there a shift in demand for U.S. exports abroad when we see Canada, for example? We know that there's been a really strong national response to boycotting U.S. goods. How are you seeing that come through in your data?
Yeah, we're down on the export side of the business, Tyler, 6 of the last 7 months, mainly on the heels of reciprocal tariffs overall, and even with the weakening of the U.S. dollar. Although subtle, really haven't seen that uptick. What we have noticed, though, is that China and other Asian nations have been making deals with different trading partners. Soybeans coming out of Brazil, almonds from Australia. And those commodities contracts are usually 6 to 12 months in duration. It, too, is not a transactional business.
Well, it's interesting to hear you say that, Gene, because the president, of course, says one of the objectives of his trade policy is to make more in America, manufactured in America, for then export elsewhere. He wants other companies to be buying more U.S. goods, and you're saying it actually could have the exact opposite effect.
It could right now. And again, we've only got maybe 2 or 3 framework trade deals done at this point in time. We're gearing up for more exports. As you remember from conversations before, we have 4 imports coming into the Port of Los Angeles to only 1 export going out. I'm here in Washington in part to try to rally support around raising the Vincent Thomas Bridge so we can handle the largest ships in the world geared toward that export market. So we're preparing years down line as these frameworks come to play and the trading nations start looking at what more they can buy from the United States.
You mentioned the so-called reciprocal tariffs. We know that another set of nations were tariffed under IEEPA on concerns of fentanyl, Canada, Mexico, part of the China tariffs too. Has there been any enforcement, or have you seen anything ramped up around your port when it does come to concerns over fentanyl coming into the country from the administration?
Heightened alert across the board, whether it be U.S. CBP or other federal agencies working with local allied folks on the ground. And that is absolutely sacrosanct to control the influx of those illicit drugs.
Well, when we think finally in our final minute here, Jean, about the overall picture in demand, the president is talking about an economy that is very strong, that could use some lower interest rates, but by and large, the administration is trying to paint things as being in good shape. Is that the view of the economy you see overall from your perch at the port?
Q1 GDP declined. Beige Book in the midpoint of Q2 was a little bit showing business contraction. We're eagerly waiting to see the Q2 results. Today's retail numbers were really encouraging, but it's been choppy as far as us being able to see that 3 months out of the order cycle process. Folks have brought in goods a little bit early, but not as much as you would think for those year-end holidays. So it'll be interesting to see what selections look like on store shelves and online buying apps for the year-end.
And we just have 30 seconds left, but this is actually something I've been wondering about as we've seen President Trump suggesting that transshipping for certain countries is going to be tariffed on a higher rate. Is there a way for the port to track what is actually coming, maybe from a vessel carrying a different flag, but it actually originated in China? Can you get detail on that? How is that tracked?
I worked in Asia for over a decade. I don't have much evidence of that. There are piece goods that go into finished goods that move out. That's a very different look than normal supply chains would appear.
All right, Jean, it's always great to have you. Thank you so much for joining us here in our Washington, D.C. studio. Jean Soroka, Executive Director of the Port of Los Angeles. And we still have much more coming up here on Balance of Power. We're going to go live to Capitol Hill next as the House passes 2 pieces of crypto legislation. A stablecoin bill that will now head to the president's desk, and a market structure bill that now heads to the U.S. Senate, where it has a fairly uncertain future. There's, of course, a rescissions vote looming as well at some point in the next 24 hours, we assume. We'll have more with Democratic Congresswoman Debbie Dingell of Michigan next on Balance of Power on Bloomberg TV and radio.
It was very interesting and instructive to look at what happened during the hour on Wednesday, when there was an expectation that the president planned to send a letter firing Chair Powell before that was corrected. My best guess is that this step ultimately will not be taken, because I think that the market consequences would be fairly immediate and quite severe.
That was former Treasury Secretary and Wall Street Week contributor Larry Summers. He was speaking in an interview on Bloomberg about the latest criticism against Fed Chair Jerome Powell. And joining us now with the latest is Bloomberg's Michael McKee. Mike, Chair Powell actually just responded moments ago to the OMB Director Russ Vought's request for information about the Fed's recent renovations. What are we learning about the Fed Chair's latest response?
Well, the people who cover the Fed aren't learning a whole lot, because this is basically what the Fed has been saying all along, but maybe Director Vaught will learn a little something. Some people think that this has been a pretext to try to find cause for the president to fire Jay Powell. Powell says that they're misunderstood, that the Fed has been regularly monitoring the costs. They've gone up by circumstances outside of their control, plus the fact that they're renovating 2 buildings from the 1930s that have never been renovated. They have to do things like asbestos removal and shore up the building on the inside so they don't collapse. One of the interesting notes that Jay Powell put into his letter is the criticism that Director Vaught put forth over what's called garden terraces. He says what the garden terrace is actually the lawn in front of the Fed building, which is the roof of the parking garage. So they have to put something on top of it, and so they put grass on top of it. So it's a very thorough attempt at debunking the criticisms that the Fed has spent a lot of money on palaces. A lot of lawyers think that it's not going to be enough for a fraud charge anyway, as the president was suggesting. But it is the Fed's latest effort to defuse tensions between the White House, the administration, and the Federal Reserve.
Well, criticism of their renovation project is one thing, Mike. Criticism of the current stance of monetary policy and where the Fed funds rate is right now is another. You, of course, spoke about that with Mary Daly, the president of the San Francisco Fed, earlier today, asked her opinion on when exactly rate cuts should materialize this year. This is what she said.
You can't wait forever, because if we wait till inflation gets to 2%, well, then we've lost. We've likely injured the economy in some way that was completely unnecessary. And so I'm of the mind that, you know, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
What else did she tell you with her thinking around this, Mike?
Well, she's basically saying much of the argument that Chris Waller has made in his effort to suggest a July rate cut, and that is that if you wait too long, the labor market can deteriorate, and we have seen deterioration in the labor market in that we are not seeing strong hiring anymore. However, the unemployment rate hasn't gone up a lot, and jobless claims haven't gone up a lot. So Mary Daly isn't signing on to the July rate cut, at least not at this moment. She also pointed out that we have seen some tariff pass-through in the inflation numbers, even if the overall inflation numbers are still in sort of the range that they have been in. So she's definitely suggesting 2 rate cuts this year, but not saying when. But she wouldn't commit to what she was going to do in July, although it's likely she would support the idea of waiting at least till September.
All right, Bloomberg's Michael McKee, live in Idaho. Thank you so much. Now, the White House press secretary, Caroline Leavitt, had to field a few questions about Fed Chair Jerome Powell during a press briefing today, saying that President Trump just spoke about how he feels regarding Powell. But Leavitt also discussed details of President Trump's rescissions package that passed the Senate last night.
Look, $9 billion worth of crap that it was in our federal funding that is now being rescinded. This is a good thing for the American people and the American taxpayer. And I think our Office of Management and Budget Director was saying this process should be more bipartisan. Democrats, there was a time in this country where Democrats, too, cared about getting rid of waste, fraud, and abuse in our federal spending. I think every American agrees the government spends way too much money on things that don't matter.
The rescissions package is now awaiting a vote in the House that could happen in the wee hours in the morning. Joining us now with more live from Capitol Hill is Democratic Congresswoman Debbie Dingell of Michigan. Congresswoman, thank you for being here on Bloomberg TV and radio. As we heard this suggestion of bipartisan compromise, assuming this rescissions deal package does indeed pass the House at some point in the next 24 hours, what does that do to the odds of a bipartisan compromise on appropriations at the end of the fiscal year?
Going to do very serious harm. And first of all, when she makes the accusation that Democrat used to be that we would work together in a bipartisan manner, DOJ didn't talk to Democrats. It didn't care about what they were doing. They went into these departments, were reckless in the cuts that they've done. They have hurt our national security. They have hurt our economic security. They're cutting programs like public broadcasting, Sesame Street. What are they doing to health and human services? I could go through a list of things. And they have jammed this down our throat. There are people that are going to be hurt. They are taking dollars that were appropriated in a bipartisan way and saying, nope, we're not going to spend them. So if this is what the president's going to do, how serious do we take an appropriation process, work on it in a bipartisan way, and think he's going to do this again? It's not okay. We should be working together. We should be eliminating waste and abuse, but not eliminating programs that are really critical to saving lives, both here and abroad. So, no, I'm not happy with the way all of this is being handled.
So, Congresswoman, what is the tactic here then from Democrats when you do have the Russ Vought, the OMB director today, saying that perhaps funding should be less bipartisan, it should be more partisan? What can Democrats actually do here to advance their legislative agenda forward if at the moment Democrats don't control either chamber of Congress or the White House?
So let's be really clear. We have a system of checks and balances. When we use rescission, which we're doing in this process, which I think we need to hold them in check on because I really don't think it is parliamentary correct. But I mean, we get into the weeds here, but a long time ago, it was decided that budget issues would not be subject to a filibuster. So when you do the appropriation process is they need 60 votes to be able to move anything. I want to work in a bipartisan way. And I want to tell all these people out there that are talking to me, that are worried about what's going to happen, their fears, elections have consequences. So right now, I'm working with my Republicans on things where it's going to help people. Our appropriators are meeting, as you and I are talking right here, and try to reach bipartisan deals. Susan Collins, the chair of the Senate Appropriations Committee, a Republican from Maine, is expressing her frustration at what's happening, and by the way, voted against the rescission package in the Senate. So you don't give up. You don't say you're not going to keep trying. I'm going to, but you got to know what you're up against and work for the moment. And know, as I say to everybody watching, elections have consequences.
Well, as we think about the idea of bipartisanship, we actually did see it on display in your chamber earlier today, as on a bipartisan basis, both the Genius Act and Clarity Act, two pieces of crypto legislation, passed. The Clarity Act got 78 Democratic votes, the Genius Act even more than that, but you were not among those votes, Congresswoman.
No.
Why?
Why was I not among them? Because I think President Trump spoke and people jumped. I think that it's reckless legislation. I want to just point out, I feel like I'm playing with Monopoly right now. There are loopholes in this legislation that endangers our national security. But President Trump has made $1.2 billion since he's become president on coinage that's being, he's trading with foreign governments on top of it all. There are ethics issues here. I'll sit down and have legitimate discussions about where we go on crypto, but the bills that were there today are just reckless, endanger people, endanger investors. There are a ton of loopholes, and I'm just not going to play Monopoly with our nation's economy.
So, Congresswoman, do you think that the Democrats that did vote for this, did they make a mistake? Because we are up against an August recess, and there did seem to be an urgency to try to get some sort of legislation when it comes to regulation of the industry passed.
Look, each of my colleagues had to make their own decision. So, Angie Craig, who's the ranking on the Agricultural Committee, said it's not perfect, we should vote for something. We each have to make our own decision. I looked at these bills. I look at the loopholes. I see how risky they are. I'm unwilling to take that vote. And I'm unwilling to continue to let people make money off of it with foreign governments that are really threatening our economic and national security. So my colleagues, I respect them. We have a difference of opinion. People inside a party can take different approaches to issues too.
Well, sure, as everyone has a different constituency that they're answering to. And Congresswoman, I would like to talk about your constituency in Michigan, obviously, as we consider a heavy presence of the auto industry. The president contends that part of his tariff policies, the tariffs sectorally on autos, for example, but more broadly, are designed to protect people like auto workers, to benefit from them. Are you benefit them in that way? Are you hearing from them that they are feeling that benefit, that this is actually policy that is working on the ground?
So I am somebody who's made it very clear. Tariffs are a tool in the toolbox. I think President Trump won on trade in 2016. NAFTA was the worst trade policy we had ever had. I think the way that he has been implementing them has been chaos. It's harmed a lot of our strategic relationships. It has increased prices. A watch company that had been in Michigan for 99 years, or clock company, closed over the weekend. You're seeing negative consequences, but we do need a level playing field for autos. And but Canada's not our enemy either. So I do think they're a tool in the toolbox. I want to work with USTR on this. We need to get it right. But the way that the chaos the way that this is all being done is causing harm to some industries, and it's raising consumer prices, and you're starting to see that. We lost a big chip plant in Michigan this week because of the chaos and the uncertainty. The company came right out and said, we're not going to build this chip plant here because the chaos is there's too much uncertainty, we just can't build it.
Just in our final minute left, Congresswoman, I want to build on this because we are seeing sector-specific tariffs, particularly when it comes to autos, come into the negotiations on trade talks for the so-called reciprocal tariff plans. I know you mentioned Canada. We're seeing a lot of USMCA compliance. But when we're talking about negotiating with the EU, for example, would you caution the Trump administration not to give away too much when it comes to the auto tariffs in those discussions? I
want to sit down and really have you can't summarize this kind of discussion in a minute. I think we all learned that NAFTA was a terrible trade policy, and it did ship jobs overseas. USMCA we still need to improve it. China should not be able to build plants in Mexico and call itself a North America product. Europe has been a trading partner with us. They've been an important ally. We got to sit down and have nitty-gritty conversations, and I hope that we are going to do that auto-specific.
All right, Democratic Congresswoman Debbie Dingell of Michigan, thank you so much for joining Bloomberg. And coming up, the White House announces a health update for President Trump during the White House's press briefing earlier today. We'll bring you those details next when we assemble our political panel on Balance of Power on Bloomberg TV and radio. This is Balance Power on Bloomberg TV and radio alongside Kaylee Lines. I'm Tyler Kendall. Here's a look at some of the other stories we're watching in today's Bloomberg Power Brief. Jeanine Pirro is one step closer towards becoming confirmed as Washington's top federal prosecutor. With no Democrats present, the Senate Judiciary Committee voted to advance her nomination to be U.S. Attorney for the District of Columbia, where the former Fox News Channel host would oversee the nation's largest federal prosecutor's office. She previously was the district attorney in New York's Westchester County from 1993 to 2006 and served as county court judge in New York in the early 90s.
Texas Attorney General Ken Paxton is threatening to arrest state Democratic lawmakers who obstruct Republican efforts to draw new congressional maps, raising the stakes for a controversial effort backed by President Donald Trump to protect the party's slim majority in the U.S. House of Representatives. If enough Democrats flee, the state legislature would be short of the minimum number of lawmakers required for a vote, a strategy Democrats have unsuccessfully tried in the past. The special legislative session is set to begin on Monday. And in response to the redistricting effort, California's Democratic Governor Gavin Newsom says he will back a redistricting effort in his state to counter any gerrymandering in Texas.
And President Donald Trump has been diagnosed with chronic venous insufficiency. White House physicians say he is in, quote, excellent health and that it's a common condition for those over the age of 70. The White House medical unit conducted a comprehensive examination of the 79-year-old president after recent photos showed him with swollen ankles and a bruise on his hand. It occurs when damaged valves inside the vein struggle to keep blood flowing from the legs back to the heart. The White House says the hand bruising is due to, quote, soft tissue irritation from frequent handshaking.
And joining us now with their reaction to this story and others is this evening's political panel. Matt Gorman, Executive Vice President at Targeted Victory and Republican strategist, alongside Democratic strategist Kristen Hahn, partner at Rock Solutions. Welcome to you both. Obviously, the White House, Matt, has made a big deal about being transparent, and we're seeing that on the medical front today as well. I wonder what you think that is in response to, as we know there had been images online circling of the president and his hands.
Clearly they're trying to get out in front of this. They also didn't notably release this on a Friday afternoon, trying to dump it there. They're being pretty transparent about it and pretty open about it. I mean, look, this doesn't seem to be anything terribly serious. It's just, one of the inconveniences of age. So I don't think that there's much more to it than that. But certainly a subtle contrast also with the Biden administration.
Well, Kristen, I actually want to pivot gears a little bit here. Beyond that story, one of the big ones that we're tracking today is the rescissions package. And we actually heard from Democratic leader Chuck Schumer, who's saying that the OMB director, Russ Vought, should be dismissed for saying that perhaps the appropriations process shouldn't be done in a bipartisan way. Is that something, in your opinion, that would rise to that level, or is this just how politics goes these days?
I mean, I think that he said the quiet part out loud. I'm not sure about dismissing somebody for saying that, I mean, Russ is not a bipartisan person. I've known him for years. I don't think it rises to the level of dismissal. I do think it's unfortunate. If you've worked in Congress, you know that the Appropriations Committee is maybe the last bastion, that and maybe the Ag Committee, where people actually work together and come together to figure out spending priorities. So, to just dismiss bipartisanship altogether in the place that it's kind of the last place it is unfortunate.
Well, couldn't we suggest that actually what you might be seeing with this rescissions effort on Capitol Hill is doing appropriations in a non-bipartisan way? Because, yes, you may make a deal and get Democrats to vote for a appropriations package on those grounds, but then you can just rescind the parts that Democrats put in there that you don't like later. That's the argument that they're making.
I think it was notable that the rescission package passed with more than just a tie, so J.D. Vance didn't have to come in. As I understand the strategy is to keep doing these rescissions packages until they can't pass them anymore, almost like the CRAs we often saw. So I would say with the tight margin we had, Collins and Murkowski against, I would expect one or two more packages of rescissions to come up at some point this year. And then again, once the appropriations process will take its course, Democrats want to fund the government. I think they realize it's in their interest too. But the rescissions package, that's what I would expect, one or two more.
Well, the other legislation that, of course, we were tracking today was the crypto legislation. And when it comes to the Clarity Act, the market structure bill, it ended up passing the House. 78 Democrats voted for it. Does this give the Senate perhaps a mandate to get on board with this too when you have what appears to be bipartisan support for the bill?
If there's ever a mandate to the Senate, the Senate's its own beast. But, I think certainly if you look at what's happening right now, and a lot of things are just purely falling down on partisan lines in the House and the Senate. If you have a bill where you have so many Democrats, voting for it, which ostensibly means that you're working behind the scenes together. I always say that there are still some things people are doing together behind the scenes that we're not necessarily talking about every day. I don't know if it's a mandate, but it's certainly something that the Senate will look at.
Yeah, well, obviously, certain issues make strange bedfellows, and we might be seeing that as well in the case of Jeffrey Epstein, or rather the case of trying to release more information about Jeffrey Epstein and the case against him, as Democrats are now calling for the release of more information, just as far-right Republicans are as well. Some of the members of the president's very base who are actually calling for a special counsel to be appointed in this case. That's something that the White House press secretary, Caroline Leavitt, was asked about during the briefing earlier today. This is how she responded.
The president said that he floated the idea of a special prosecutor in the Epstein case. Can you confirm that? And has he asked the Attorney General to do this, to appoint a special prosecutor to look it over?
Well, the idea was floated from someone in the media to the president. The president would not recommend a special prosecutor in the Epstein case. That's how he feels. And as for his discussions with the Attorney General, I'm not sure.
I just wonder how some of his supporters might feel about that, Matt, or as he referenced in a True Social post overnight, some of his past supporters who he says are buying into this hook, line, and sinker.
Remember, many folks at the DOJ and the Trump administration believe that a special prosecutor is illegal on its face. So I would not be surprised to see that jettisoned regardless. That's also politically a way to keep the story going in a way they don't want to, right? I think Republicans fighting with themselves is catnip for the media. So the more they do it, the more people are going to cover it. So I think in a lot of respects, this has been one big Streisand effect. You're calling attention to something you don't want to call attention to by protesting too much. And so I think the more that this kind of plays out, with Democrats certainly help, it's going to cause more and more media coverage, and it's going to be self-perpetuating.
Well, I was going to follow up on that and ask, when will this go away? Is there any chance that it goes away when we now have a bipartisan move in Congress that could potentially force a public vote for members to vote on having the government release the files of the case?
Frankly, it'll go away when there's not enough new news to talk about it, right? I think that is the key, right? After this vote, we will see if they end up discharging this. Depending on how the timing works out, this could be after August recess. So one thing I think Trump recognizes is the media attention, he's willing to outlast it. He's tried shifting some priorities, even the Powell float. That will not work, so he almost has to run up the clock a little bit.
So suggesting, Matt, is that the Powell float was potentially something to try to divert the media cycle away from Jeffrey Epstein. Kristen, do you see it that way?
I think this is maybe, as a Democrat, and the midterms are a little far away, but I always try to keep our eye on the ball. It's about the economy. It's about, I don't want to get distracted by other things. However, I think, with a lot of Trump supporters focused in on this issue, I'm not sure that they're going to be deterred by a simple, diversion here or there. I mean, time will tell, but I think it'll be really interesting to see. But I don't think that it'll divert their attention on something that they were really focused on for a while.
Well, Matt, since you did bring up the Fed chair,
yeah,
we have to ask you about this. But we have spoken to quite a few Republican lawmakers on the Hill who say that President Trump does have the right to criticize Jerome Powell. But what is the needle that these Republicans have to thread behind backing President Trump's criticism? but also these legitimate questions about the central bank's independence and credibility going forward.
Well, anybody can criticize anybody else. It's a free country. But I think, look, in an administration as economically, ideologically diverse as Kevin Hassett and Peter Navarro, they are all united, as I understand it, against really being extremely annoyed, to put it lightly, with Jerome Powell. And I think what they're hoping for is, in order to restructure a lot of the Biden debt that is coming due it later this year, you're seeing obviously tariff revenue is a very important part of that, but they need rates lower. They need them around 4% by January, looking at 2 rate cuts. So if that doesn't happen, I think you're going to see an extreme level of frustration with that cabinet that's economic cabinet that's quite diverse.
Kristen, we just have like 30 seconds left here, but when you consider the president's criticism of the Fed chairman, what do you think it's actually a reflection of? Is it about the interest burden of the United States, or is it about that he wants people to feel better about his economy than they currently do?
I think it's the latter. I mean, I think that he needs, he wants the Fed chairman to react to his economic policies, and it's not exactly how that works all the time. So, Fed chairmen over the course of history have been criticized by presidents on both sides, and there you have it.
All right, our political panel tonight, Matt Gorman and Kristen Hahn, we thank you both so much. And for more of the stories that we've been discussing, check out the Washington Edition newsletter on the terminal and online.
And of course, we'll see you back here tomorrow for the Friday edition of Balance of Power. We're almost through the week, everyone. I'm Kaylee Lyons alongside Tyler Kendall. We'll see you then on Bloomberg TV and radio.
This is the Asia Trade. I'm Sherian in Tokyo.
I'm Heidi Stroud-Watts in Sydney. The top stories this hour. A strong lead-in for Asia, with the S&P 500 setting a record on signs of US economic strength. TSMC's ADR is gaining on its upbeat sales forecast. The crypto sector getting a major win as Congress passes its first federal bill regulating stablecoins, paving the way for broader use in finance. Plus, high stakes for Japan's Prime Minister in Sunday's upper house election, with voters turning away from the ruling party amid worries about soaring prices.
Take a look at how we're setting up for the Asia market opens. We are seeing U.S. futures barely moving after the S&P 500 already hit another record high on Wall Street overnight. We're talking about the S&P 500 topping that 6,300 level. We continue to watch, of course, all of the gyrations around the economic data in the United States. We had a rebound when it came to those retail sales broadly in June. Not to mention that we also had a solid jobs data with jobless claims falling for 5 consecutive weeks, although the Fed Governor Christopher Waller thinks that this is the right time to cut for the Federal Reserve, as we're now seeing emerging signs of weakness in the labor market. We had a little bit of a mixed picture in the Treasury space. We were watching crypto-related stocks as well, as Congress passed the first federal legislation when it came to those stable coins. And take a look at how we're setting up for the market opens across Asia, because we had seen marginal gains for Asian stocks in the previous session. The Nikkei actually rose. The Japanese yen has been under pressure, rebounding in the early morning morning session here in Asia, but of course we continue to see the concerns around the fiscal picture in Japan, given that we are headed to the upper house elections this weekend. And polling now here across media in Japan showing that perhaps Prime Minister Ishiba's ruling LDP could lose its majority. What that really means for the broader economy at a time when we do get CPI numbers also later today rising. We have seen that inflation trend accelerating here in Japan, and on top of that, of course, the fiscal concerns, not to mention the trade negotiations ongoing with the United States. In fact, U.S. Treasury Secretary Scott Bessent is set to meet with Japanese Prime Minister Shigeru Ishiba today here in Tokyo. North Asia Economy and Government Editor Yuko Takeo joins us now for more with the latest on these upcoming upper house elections. And Yuko, what's at stake here? Because I just mentioned a few of the challenges that the Prime Minister already faces.
Right. So Bessent's come over to Japan for the first time after Chief Trade Negotiator Akazawa has flown no less than 7 times to the US for talks. And basically so far there's been not much to show for it. Bessent's set to meet with Prime Minister Ishiba, like you mentioned, later today, and he's going to the Expo tomorrow. But the problem is that the US side seems to be reluctant to talk too much about trade while Bessent's here. The underlying issue remains that the US and Japan still aren't really seeing eye to eye on cars. The 25% sectoral tariffs is hitting Japanese car makers' profits hard, while the US sees this as a key area to reduce their trade deficit with Japan, and it seems difficult to come to an agreement over it. So all in all, the expectation is that it's unlikely to be too much progress as Japan heads into the upper house election on Sunday, which is not very good news for Ishiba.
And building on top of already not very good news and expectations, right? What are we looking at when it comes to these election results?
So the big question basically is whether they manage to hold on to their majority, whether the ruling coalition government manages to hold on there after they also lost their majority in the lower house. And right now it's basically looking pretty shaky for Ishiba's